Let me see how many people are in here. 13. I allowed to talk. Let's see how many people are in here.
Hello.
Hi. Okay, so I'm gonna go ahead and share my screen. Let's do a few more questions. Gotta log back in. How was everyone's lunch?
Great.
Good? What'd you guys have?
A walk.
A walk.
A pesto chicken sandwich.
Oh, yum. Okay.
Taco Bell.
Taco Bell, fair. No, that's so fair. I used to, so I was raised Catholic and we like, you go through like confirmation and then or first communion and then confirmation, all this stuff. So when you go through confirmation, you go through these classes that you have to do, like I think it's twice a week or once a week, I can't remember. And every time after I would go get Taco Bell. I mean, it was incredible. I loved it. I was like, fine, I'll go if if we get Taco Bell. No, I'm kidding. But anyway, let me go ahead and share my screen. So now we're going to do the PSI Life. We're going to do 25 questions from there. And then we're going to do 25 questions from the Prometric. So, oh wait, my screen didn't share. Let's see. Share. How about that? Can you guys see that?
Yes.
Cool. All right, I love it. Okay, so just as always, if you guys, know the answer, don't know the answer, whatever you want, scream it, say it, talk about it. Okay, this is about you guys, not about me. So I want you guys to be the main ones talking and discussing, right? Okay, so a type of insurance company that is owned by its policyholders and may pay dividends to them.
Neutral.
Okay, everyone agree with that one?
Yep.
Yep. Anyone have any questions about that? I'm going to take that as a no, and we're going to move on. All right. The funds set aside by an insurance company to pay future claims are known as?
Reserves.
We talked about that earlier. Sweet. All right. Everyone was cool with that? Okay. A client wants a life insurance policy that provides both long life coverage and the ability to accumulate cash value. Which policy?
Whole life.
Life. What was that whole?
Whole life.
Okay. We agree with this one? Cool. Why wouldn't it be term?
Because there's a limit to it. It's not going to be the whole life.
Okay. So that's true.
And
What
cash
else?
value. Cash value.
Cash value.
Cash
Cool.
value.
Cash value. So, why would someone get a decreasing term insurance? What's the purpose of that?
Most of the time they use decreasing, well, I associate it with, and it tells it too with like getting a loan because it decreases as you go along, your death benefit decreases.
Like a mortgage.
Yeah, mortgage, sorry. That's what I meant. Yeah.
That's perfect. We know what you're talking about. So that's exactly right. So you have a mortgage, you have to pay it off. Let's say you have 20 years left on it, and you buy a term life insurance or a term insurance, and over time it's a decreasing term, so the premiums usually stay the same, but the death benefit starts to decrease over time because obviously you don't have as much money that you still have to pay off over time. Okay. What about accidental death insurance? That's pretty straightforward. Anyone want to elaborate on it? No. Accidental death. There's nothing else I can say about it. It's an accidental death. That's what it is. Okay, cool. We're cool here?
Yeah.
Sweet. Okay, which of the following individuals would benefit the most from purchasing an annuity?
The 65-year-old retiree.
Okay. Did someone say E?
I said C.
Oh, C. I was like, E. I was like, hold on. What
I
are you
hope
guys looking
not.
at?
I hope
Okay,
not.
good. Good, good, good. How do we feel about this? Good?
Yep.
Sweet. An individual wants life insurance that allows them to adjust both the premium payments and the death benefit while also building cash value. What policy would be the best choice?
Universal?
Okay, what do we feel? Are we feeling universal?
Yes.
Yep.
Lacey Hush.
Good on this one?
Yes.
Cool. David is a 45-year-old father with a mortgage and young children. He wants an affordable life insurance policy that will provide financial support. Like I'm just adding words, financial protection for his family until his children become financially independent. Which policy is most appropriate for him?
Be term.
How do we feel? Agreeance? No, someone?
No.
No? What are you thinking?
I honestly can't choose between universal or variable.
I'd say
But
term
not
because
too sure if it is.
he wants those portable, right? So it'd be term.
Yeah, but term doesn't protect his family after he dies.
Wouldn't it be universal because he can control how much his payments are?
Okay, that's a good
Okay.
thought.
Yeah.
What else are we thinking? Is that what we're
I put universal.
with universal? Are we sure?
I say term because it says until
Okay,
the family becomes financial.
good.
Term is because it revolves around his children until his children become of a certain age. And then
Yes.
he doesn't
go-
need it, so it's to a certain time, to a certain term.
Right.
Okay, so I'm hearing more term now. Are we going term?
Yes, because isn't universal and wouldn't they then be considered whole life as well?
Universal's whole life.
Right. So I'll go with term 2.
Okay, I think I got mostly term. Is that
Term.
term? All right. Yay. Okay, so let's talk about it. We had a lot of conversations here. Okay, I heard a lot of good things. Okay, so affordable life insurance, that's the first, well, not the first big thing I see, but that's what sticks out to me. Okay, what is more expensive, whole life or term life?
Whole.
Oh,
Whole life. Why?
Because it's whole.
Because it's whole, right? You're going to be paying for a lot longer. Okay,
Mhm.
and for the most part, the insurance company is going to have to pay the benefit in a whole life. As for a term life, a lot of people outlive their term. That makes sense? So whole life is usually a lot more expensive than term life. So an affordable option, let's take out whole life because we need something shorter. Okay, we need an affordable option. He's 45 years old, he has a mortgage, and he has young children. Okay, the children aren't going to be young forever. The mortgage isn't going to last forever. Okay, he wants to provide financial protection for his family until his children become financially independent. So now we're feeling what? We're feeling more term, right?
Mhm.
All of these things come to an end, right? He's not
Mhm.
gonna have a mortgage forever. He's not gonna have young children forever, and he wants affordable life insurance. What are we thinking? Goes to term. Are we good with this one? Or do we still?
Is variable life insurance whole as well?
Mhm.
Okay.
You can get a variable term, but let me not say that because as for the test, and again, in real life, it's going to be a little bit different than on the test. Okay. And I know I keep saying that. So whenever I say this, let's just focus on the test. So in the test, variable is usually going to be whole life. Okay. And they're not going to ask you that. They're not going to ask you that at all. If they're asking you about variable whole life, it's going to be like, oh, they want they want to invest and, stuff like that. You'll hear more like the financial side if you're talking about variable. life insurance. If you're talking about universal, they're like, they want like, premiums that they can change. That's like the biggest thing that you'll hear for universal.
Oh.
Good here?
Good.
Cool. 55-year-old business owner wants a life insurance policy that builds cash value and allows them to invest in different market-based sub-accounts. They are comfortable with market risks and want higher potential returns. Which policy should they choose?
Whole life
Variable.
I heard whole and I
or
heard
whole?
variable.
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 Okay. So we're going with variable?
Oh, yeah, variable. Mm-hmm.
Okay, good. Variable. So we're on the same. So why are we thinking variable?
The different market-based sub-accounts.
Sub-accounts, right? You hear sub-accounts, variable. Sub-accounts,
Mm-hmm.
that's all you think. If it says index, don't think about it. You see sub-accounts, variable. Sub-accounts, variable. Cool?
Yes.
All right. Susan is 30 years old and concerned about inflation reducing the purchasing power of her life insurance benefits over time. What policy rider should she consider?
Isn't that cost of living adjustment?
Estimate writer.
What do we think?
I'd agree because it's
Cost of
longer.
living.
Yeah?
Cost of living, because the cost of living is what impacts
Same.
how the inflation of the economy.
Good.
Mhm.
Like
And it
cost
gives
of living, inflation, or economy.
and it gives abbreviations the longer.
She's like, it's a long one. It's a long one.
I'll go ahead and test that theory today.
Right. Should we test it? See which one the long. Look, I can't condone any of this. I don't know. But anyway, you guys are right. Cost of living. It says it right in the definition. She's concerned about inflation reducing the purchasing power of her life insurance benefits. Cost of living adjustment. It adjusts over time, right? Cool.
Yes.
Cool. What is the guaranteed insurability rider? Or what is guaranteed, not rider, what's the guaranteed insurability?
It's guaranteed that you're insured.
You can
Oh,
renew your policy without health questions.
Good.
no.
Yeah, you can renew, you can add things on, renew. A lot of times you'll hear this as GI. So if you're in a meeting and they're like, oh yeah, this one's GI, guaranteed insurability. Okay. It's yeah. So I remember the first time I was sitting in a meeting and someone was said GI, I was like, GI. I was like, why are we talking about like gastrointestinal stuff? Like, like why are we like what where I'm lost. I'm confused. Where are we? So yeah, GI. Just so you guys know. Okay. So all of the following are characteristics of mutual insurance companies except
D.
D,
They pay dividends to stockholders.
C.
Yeah.
So we got D and C. Which one are we thinking?
C.
C.
See,
D?
C.
Yay!
Let's see.
So let's talk about it. So they pay dividends to stockholders. What would that be? What's a character? What would a characteristic of what would be they pay dividends to stockholders? What kind of insurance company? Says it
Stock
in-
insurance company.
Stock insurance
There you go.
company.
There it is. You got my back. You guys got my back. Okay, cool. Stock insurance company, they're going to pay dividends to stockholders, right? A mutual insurance company can be converted into a stock company. A little fun fact. Okay, we're cool here? Cool. I don't know about you guys, but I feel good right now. I'm like, I just ate. I'm like, I'm feeling spicy, like upbeat. I'm gonna have a sugar crash at some point. I'll tell you what. I had so much peanut butter.
I made a mess.
What was that? What was that? Or I think so. Okay, the following are strategies used by insurance companies to manage risk except
Free.
offering guaranteed coverage to
Yes.
all applicants without underwriting.
Correct. Mm-hmm. Mm-hmm.
Good about this one?
Can we break
Yep.
that one down?
Yeah,
It's
let's break it
longer.
down. Okay, what the heck? So we're managing risk, okay? So the insurance company, yes, they want to bring on people because that's how the insurance company makes money, but they can't bring on a lot of people. And I'm thinking of a word or a definition here. We haven't gone
Mhm.
over it yet. Does anyone, it starts with an A. AD.
Annuities? No?
Ad-
Oh, A and D?
Adverse selection.
There it is. Good. Okay, adverse selection. Joy, what is that?
Mm.
It's individuals with a higher risk.
Right. Yeah. So they don't want to bring on a bunch of people because people who are at higher risk are usually the ones who are like, I need insurance, right? They're going to try to get insurance before anyone else because they're like, oh shit, I'm doing, sorry. Oh crap. Oh, that's not even better. Oh, I'm doing something bad. I'm doing something crazy, whatever. They're like, we need insurance. Okay. But an insurance company can't only bring on people like that. Okay. Because otherwise they would just be paying claims, and they'd go out of business. They couldn't. So they need people kind of all different realms, right? We had 3 different categories that we classified people in, risk classification. Do you guys remember?
Mm-hmm.
What are they?
Preferred, standard, and
Substandard.
substandard.
Good. Preferred, standard, substandard. We need a little bit of everything, right? A little bit of everything. Ideally, people would love to have just like preferred, right? If an insurance company can like have only preferred risk, that's like, oh heck yeah. They don't have to pay a single claim. They just make money, right? But naturally, you're gonna have a little bit of everything. You definitely do not want to have substandard, a whole bunch of substandard people, because then again, you're gonna be paying a bunch of claims. Okay. So we're managing that risk. Okay. So what are they gonna do? What is reinsurance?
Insurance company asking another company to back them up for
Good.
risk.
Right. It's the bear behind me, right? It's like, okay, I'll insure you, but I gotta have this bear behind me that's gonna help me out if something goes south. Okay, cool. What is risk pooling? We kind of just talked about it a little bit.
Basically like a group with the same type of risk. Does that make sense?
Anyone?
Why do I got time? When I have people coming over, do I have the Wi-Fi again?
Okay. Anyone else want to add to that?
Where? Who does that?
Excuse yourself.
Hey, you're baby.
So, okay, I think there's a lot of background noise. I'm not sure what's going on, but
Sorry.
no, you're good. You're good. Okay, so risk pooling, it's exactly what you said. It's pretty much just like determining where people are, bringing different groups of people together, kind of thing. It's exactly what the name suggests, right? Risk pooling, bringing different groups of people. Okay, pooling the risk. Okay, so let's do using the law of large numbers. What is the law of large numbers?
Isn't that where they take like people that are high risk and low risk and kind of put them together, but in a larger group so that it kind of balances itself out?
Okay. Yeah. So the law itself is pretty much saying let's say I have a bowl of marbles. I have a bowl of marbles, okay? And I go in there and I keep grabbing. The more I grab, the more assortment I'm gonna have, and the more likely I have a chance I'll grab someone who, maybe why do I keep want to say Orbeez? A marble that's like blue or pink, right? So the law of large numbers is essentially saying the more you have, the more diverse you'll be. Okay? The more you have, the more of this type of person you'll have. Does that make sense?
Yeah.
So a lot of the times they'll also say the law of large numbers in insurance. The more people you talk to, the more likely you are to sell a policy. Cool.
Mm-hmm.
Okay. So, we got that. So law of large numbers. So do you guys think, so all of these things, so let's go back to the question. So the companies, all of these are to manage risk except for, so reinsurance can be managing risk, right? Because I have this guy behind me that's going to help me out if I can't handle it. So that's managing risk. Risk pooling, figuring out who is what, putting people in different groups, that's managing risk, right? And using the law of large numbers. If we get a bunch of people, there's no way we can only have substandard risk, right? We'll have a little bit of everything. Okay. So the only one that isn't is offering guaranteed coverage to all applicants without underwriting. What would that would create a mess, right? It's like, we don't even care your medical history. We don't care about anything that's going on. We'll write a policy for you. You could be a smoker, you could be whatever. We don't care, right? That would not be managing risk at all. That'd be creating risk.
Yeah.
Cool?
Yeah.
All right, sweet. A non-forfeiture option in life insurance that allows the policyholder to use the accumulated cash value to purchase a reduced death benefit policy with no further premium payments.
B.
B? We talked about this one a good amount before. Do we all feel comfortable about this?
Yes.
Yeah? Okay, cool. So we'll go, let me see if there's anything on here that we should talk about. Cash surrender option. That one's kind of straightforward. Does anyone want to just do a little quick summary of what the cash surrender option is?
Yeah, you just take the cash.
There you go. Take the cash
There
and
you
run. Heck yeah. You're like, I don't want the policy anymore. Give me the cash, right?
A lot of these are similar to the Pearson View ones.
What was that?
A lot of these are similar to the Pearson View ones.
They are. The wording is a little bit different. I don't know if you guys noticed. It's a slight change, but the wording's a little bit different, but they're very similar. Yeah. All of the tests. That's why these can be generalized. That's why these pre-licensing courses can be generalized. Obviously, they'll write specific questions for specific states, but a lot of the questions can be generalized. Yeah. So, okay, cool. So, let's see what else. Extended term insurance. We haven't really talked about that. What is that?
Mm.
You buy more insurance to extend the term of the.
Good.
Yeah.
Yeah, it's extended term. You extended your term. Okay.
There's always a key word with that. It's limited, like a limited thing, limited, something limited. So when they be like, oh, this for non-forfeiture option and it says something limited, 9 times out of 10 is extended term insurance.
It's like Carly's thing.
Okay.
Is that the same as renewing your term insurance?
Renewing is different. Renewing is you renew the whole thing. So like, let's say I had a 20-year insurance, 20-year pay insurance, or not 20. Let's say I had a 20-year term insurance. Okay. If I renew it, I'm like renewing the whole thing. Extended term, I can extend it for a little bit of time or a lot of time.
Okay.
Dividend accumulation.
You pay with your dividends, right?
You're letting the accumulate. So you can decide what to do after that. If you want them to reinvest it, if you want them to pay some of your premiums, it's up to you. But yeah, your dividends, the little thank yous that they're going to give you, you just let them sit there and they can gain interest, whatever.
Can you use that towards your premium payment?
You can. Some people, some insurance companies, yes, you can.
Don't they also allow you to put out like little policies as well?
What is it?
Don't they also allow you to make like little policies with that too?
If you can, yeah. You can add policies. Yeah. With your dividends, they're pretty, again, it's different for different companies, but they're pretty lenient with like, okay, this is yours. This is your money. If you want to buy more, if you don't want to buy more, if you want to let it sit here, let it gain interest. Yeah. Yeah, you guys are correct. Cool. Good about this?
Yes.
Sweet. A provision that prevents an insurer from denying a life insurance claim due to misstatements on the application after the policy has been enforced for 2 years. Talked about this one earlier.
Incontestability.
Yeah. Really fast.
Good. Okay, let's talk about these. Entire contract. What is the entire contract?
Everything that's included in your, like what your policy is, your rates, your premiums, basically like front to back, like the whole shebang.
Yeah.
Summary.
The whole shebang. Is your application included?
Yes.
Yes.
Good. Yeah, it is. Heck yeah. Contestability clause. I'm gonna have to look this one up. I totally forgot it. But if anyone remembers it,
So
go ahead.
it's basically, you can contest to it. So that means like you can't. So this is after. Please correct me. It's after 2 years. So basically, after the 2 years pass, no. It's before. I'm wrong.
It's 2 years.
It's before 2 years. So that's right. Okay. So it's before the 2 years. You can basically contest anything. You poke at. I kind of contest is like poke at it. You can poke at the policy or the policy holder for, I don't know, whatever, deny whatever.
You're right. So, in the first 2 years, they can investigate claims, what you wrote on your application, and make sure it's all correct. After 2 years, they can't. Cool. So the contestability clause is the first 2 years. Incontestability clause comes into practice after 2 years. Good here? What's the free look provision?
Gives the owner permission to look at it without committing to the actual policy.
So I remember free look, free trial.
Yeah.
Free trial.
Good. They can look at it 14 days. It's different, 10 days, 14 days, different in different states. And they can decide if they really want it or not. And they can do that without having to pay. Cool? All right. Which of the following is a necessary element of a legal enforceable insurance contract? Of a legally enforceable insurance contract?
C.
Look, here we go with the long one. How is everyone else feeling? What'd you say?
C.
C.
Good, and we all agree with this one? I think so. Woohoo! Do we have any questions?
Now I'm gonna.
Good. Okay, so legally enforceable insurance contract, it has to offer an acceptance, consideration, a legal purpose, competent parties, insurable interest. Can anyone think of anything else? All of those things. All of those things, right? Cool. All right. An individual applying for life insurance must have an insurable interest in the insured. Which of the following relationships would best demonstrate an insurable interest?
Business purchasing, yeah, B.
Good. We agree on this one?
Yeah.
Yep.
Cool. Any questions on that one? No? Okay. What was key person? What I think I said key person. What was key person? Key person.
What's a key person?
Yeah, key person is so like if me and my business partner were like if my business partner Steve was to die and he was an important asset to our company, I think I get it confused with buy and sell agreement.
Yeah.
So, it basically what it would cost to replace him, if that makes sense. Like I don't know if that makes sense. Like either I have it backwards, Miss Jules, or maybe wrong. I don't know if that makes sense.
It's like a,
Go ahead.
sorry.
No,
It's
go
like
ahead.
a special,
It is where the key person is it could be an executor or whatever of a business, and that the company, they will sustain a big loss if that person, dies, and so they're insuring somebody on there is a key person as well.
Good. Okay. So, you guys are all on the right track. So like if it's a business partner, usually that would be more in the context of the exam. If it's a business partner, that would more so be the buy sell. Okay, the buy sell agreement where it's saying if my partner dies, I have the funds to buy out their part of the company. Okay, key person in that scenario, let's say it's a top manager where if
Okay.
they die, it's all going to crap, right? So like I'll take out a key person, I'll take out key person insurance on them, or key person policy on them, because that's a key person where if they pass away, the company would have financial loss, there would be a lot of loss in that. Okay. But if it's a business partner, I would think more so buy sell just in terms of the exam.
So I have actually a chart that I made, and that's why like this is where I get myself confused.
Okay.
So I made a chart of key person and buy sell agreement. Key person, I'll read you down the list or like the difference. I'll read each one. Key person covers the key employees or owners. Buy and sell agreement covers business partners and owners.
Yeah.
And then key person, business gets money, and then buy sell agreement, other owners buy out the deceased owner's share.
Yes.
So basically one helps and one transfers. So think of transfers as in like everything transfers to the one owner by buy and sell, and key person is like it helps it from getting like a loss, like kind of like an essential manager, a project manager. If he dies and the projects can't continue, therefore they're going to lose money.
Good. Perfect. So just say this again, just for you guys, when you're now, I'm not going to say this always, but for the most part, pertaining to the exam, when they're talking about buy sell or when they're talking about a business partner, I would more so think of buy sell rather than key person. Okay. Because that might confuse you if you're like, well, it could be this, but also know the definitions because they totally could say, oh, we had a key person, key person employee on, or a key person policy out on, one of the business partners and he passed away. But for the most part, I just want to say that in the context of the test, usually when they're talking about a business partner, it's going to be buy sell. And when they're talking about an employee, they're going to be talking about key person. Cool.
Yep.
Sweet. But that was a perfect description of the two. Buy sell, you're going to get money to buy out the other person's half. Key person, you're going to get money from the insurance company. Cool. Just to support whatever's going on. Okay. John applies for a life insurance policy and submits the first premium payment with his application. What happens if the insurer decides to issue the policy exactly as requested?
C.
How do we feel about this?
Yes.
yes.
Yes?
Yes.
Yay. Okay. Any questions?
So I have a question. So this reminds me of a question on the exam. It was saying basically same scenario, pays first payment with his application. And then basically it was asking after he pays it, when does his policy start? The moment that his application starts or whenever his premiums, he pays his first premium? Whenever he receives his application.
Whenever
So
he receives the receipt. So he sent in an application and a premium payment, but the insurance company has to go back and create a receipt and all of that. So it doesn't really have anything to do with him. It's more so once the insurance company approves everything and then gives him a receipt.
Okay, so once he gets his receipt, it starts.
Yes,
Okay, back. Okay, thank you.
of course.
When the insurance company issues, right, the document, not when he receives it.
I'm pretty sure it's when he receives it. Let me double check just to make sure, but I'm pretty sure it's when he.
Yeah, because I had that I had that question in my test and I think I got it wrong because I'm confused. For example, if the insurance companies approve everything today, but then that certificate or whatever is going to be mailed to him, and is when he receives it or when the insurance issues the
It's whenever
the
there's
certificate of insurance.
right. So it's whenever the insured receives the receipt.
Okay.
Whether that's binding, conditional, that's when it starts.
That can be delivered by mail or
Mail or in person.
in person.
Mhm.
Okay. Okay.
Yep.
Thank you.
Of course. Okay. A type of insurance contract in which only one party makes an enforceable promise.
Collateral.
Unilateral? How do we feel about
A. Yeah.
good?
A.
Okay, we talked about this one. So, let's see. Conditional, we talked about that. What about adhesion? What's an adhesion contract?
That's, kind of like take it or leave it. This is the way it is.
Good. That's all you guys have to remember. Take it or leave it. Adhesion.
What was bilateral again? I'm sorry.
So bilateral is both of them make a promise. Both sides make a promise.
Okay. And in conditional contract is under its conditions.
Conditional, yeah. So conditional is under these conditions will it happen?
And that's
For
on one party or two parties?
For conditional,
Yes, ma'am.
usually it's one party. It could be two, but usually it's like, hey, we'll do this if let's think of a good example.
For example, me paying the premiums.
For example, you paying the premiums. So yes, that's actually a great example. Perfect. Any other questions regarding these? And let me.
The
Go ahead.
conditional, could that also be pending like a medical exam?
That's more of like a conditional receipt. So that's more like a conditional receipt. So yes, it could. So let me give you guys the example here. So here, so a policy in which the insurer's obligation to pay its benefit. Okay. A policy in which the insurer's obligation to pay the benefits is dependent on the occurrence of a specific event that the contract covers. Okay, so like if this happens, we'll pay. Maria purchases a life insurance policy and the insurer promises to pay the death benefit to her beneficiaries. However, the promise is conditional. The insurer will only pay if Maria passes away while the policy is active. Okay, for the policy to remain active, Maria must continue paying her premiums on time and comply with any other terms of the policy. If she fails to meet these conditions, such as missing payments, the insurer may not be obligated to pay the death benefit. Does that make more sense? Yes, no, maybe so.
Yeah.
Yeah. Do we all feel okay with that?
Yeah,
Are you sure? I feel like there's a little hesitancy in your voice.
I'm sure.
Okay, good. Cool.
So
Okay.
I forgot to ask. So when it's a conditional contract, is this in all policies or specific policies?
It's so conditional is usually part of all policies. Like we will pay the benefit if this happens. Like we will pay if you keep paying your premiums. We will pay if the policy's active. So yeah, it's usually for all of them.
Okay.
Yeah. Okay, cool. Any other questions here? Okay. Which of the following life insurance policies allows the policyholder to adjust both the premium payments and the death benefit? Ooh,
B.
Universal.
B.
how do we feel? Good? Cool.
Yeah.
Okay. So remember we were trying to distinguish the two earlier. I think we were talking about universal and variable, were we?
Mhm.
Okay. So see how here, when it's talking about variable, it's going to be talking about a lot on the investment side of things. If it's talking about universal and it wants you to answer universal, it's going to be talking about the premium, the adjustable premium payments, the adjustable death benefits. It's not really going to talk about the investment side. It could, but usually it's just going to be talking about the universal. I mean, the premiums and death benefit adjustable sides of that. Cool?
Yes, ma'am.
Okay. What is a key characteristic of decreasing term life insurance?
The death benefit decreases over time.
Good.
B.
Good. Okay, so this is something to remember. Decreasing term insurance, that doesn't mean the premiums are decreasing. When it's talking about decreasing or increasing, it's talking about the death benefit. Okay, cool.
So then I have a question. So then what is the point of, so when people, and I'm sure everybody has seen it, the mortgage question. Stephen has a mortgage and he wants to have a life policy like that. Why would that benefit him? I thought it was because of the premium, because when you start paying off your house, so your premium gets a little bit smaller over time.
Okay, so let's think about it. So he's pulling out a policy to cover a mortgage. So if he dies, someone doesn't have to, one of his relatives or someone doesn't have to take that responsibility, right? So he's like, I'm going to take out a policy, but as you pay off your mortgage, is there more or less over time?
Less.
Less, right? So
Right.
going to be paying into this policy where the benefit is going to be going down, down, down over time. Because over time, he's not going to need that much benefit because the mortgage isn't going to cost, $500,000 anymore. After 10 years, maybe it'll be $300,000 or $200,000.
Mm-hmm.
Does
Okay.
that make sense?
Yes.
Okay, cool. Why would someone want an increasing term insurance? This one's a little bit trickier.
Maybe because of their health.
Good. Yeah. Maybe because of their health. They're getting older. Maybe because, they're worried about financial losses in the future. Things like that. Cool? All right. Which type of life insurance policy would be best suited for someone who wants lifelong coverage and cash value accumulation?
B.
Hold on.
Feel good about this one?
Yes.
Yeah.
What is credit life? Because that question came up on my test as well. It was like credit life, da 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 da. What is a credit life insurance?
What do you guys think? Anyone know this one?
It's where life insurance covers someone that has an extensive debt.
So
Yeah.
like if like over I guess huge credit card payments or like student loans?
Yes.
So what is this similar to?
Increasing term.
Good. Decreasing term insurance. Yeah. Credit life insurance, I'm going to take out a loan, or I have a loan that's taken out, and but now I'm going to get credit life insurance. So if I can't pay that off and I die before, then I can it's going to be covered. I don't have to worry about my spouse or whoever else having to deal with it. Okay. A decreasing term, very similar. Okay. I take out a loan, I have a mortgage, and over time, I am going to, pay it off slowly. So it's going to be a decreasing term. Does that make sense?
Yes, ma'am.
Okay. A client wants a life insurance policy that allows investment in market-based sub-accounts, wink, while still providing a death benefit. Which policy would be the most appropriate?
Variable.
3.
Yay! Everyone agree with this one?
Yeah.
Cool. James, a 35-year-old father of 2 who wants an affordable life insurance policy that provides financial protection for his family if he passes away unexpectedly. He does not need a cash value accumulation. Which policy would be most suitable for him?
Term.
Term.
Good. We talked about this one or something similar to this, right?
Yeah.
Affordable. He wants affordable protection for his family. Doesn't need cash value accumulation. His family's not going to be young forever, right? So term is perfect for him. Cool. Samantha wants a
And so,
Go
sorry.
ahead. No,
And
go ahead.
so he will just keep on renewing that term insurance until his kids get bigger?
He can. It depends. Like, let's say he buys a 5-year term and then he's like, oh, well, I thought my kid was going to be out at 18 and now they're staying home for another 4 years. He could renew that and then it would be another 5 years.
Yep.
Cool.
All good.
All right. Samantha wants a life insurance policy that allows her to stop paying premiums after 20 years while still keeping the policy in force. Which policy should she choose?
Limited pay.
Yep.
Good. How do we feel about this?
Good.
Good. Limited pay. You're paying for a specific amount of time, and then you get coverage for the rest of your life without having to pay premiums. Do you think premiums are higher or lower for limited pay?
I
Higher. Why?
because you have to pay them off at a certain amount of time.
Right. Because the insurance company wants to make its money somehow, right? So it's not going to give you a little deal because you're only paying 20 years. It said, oh, you could pay 20 years, but you got to pay a little bit more.
Okay. So this was actually I don't mean to keep stopping. It's just this is mainly the key part of like why I'm failing. Like I'm looking at my chart right now. Straight life, can we break down each of them? Except term life. I know term life. I'm more straight life, limited pay, and adjustable. I feel like whenever they put like I know what whole life means, but when they put limited pay or straight whole life, that's what throws me off. Like not like if that makes sense. Like I don't know I forget everything basically. I guess my mind goes blank for some reason.
I hear you. So no worries. So the straight, the limited pay, things like that are all going to be only pertaining to how long you're paying the premiums. Okay. You're going to be covered your entire life. Whole life insurance. You're going to be covered your entire life. Okay. Straight pay, you're going to be paying straight through your entire life. Okay. Same premium straight through the whole time.
Okay.
Limited pay, you're paying for a limited amount of time. But it's still whole life insurance, so you still get it your whole life. Straight whole life, you pay straight through the whole life.
Did you guys watch one of the videos that he did on the programs where on our schooling, where he was showing us our whole life and what forth, and then he did the straight life or he did the limited, and anyhow it showed how it would stop at one point or how it went up a little bit to show how long you actually paid on the premiums. Those charts, I don't know if those would help you guys better see, to be able to actually physically see how long and be able to put limited and, straight, or the, yeah, how those first words go into your whole life, so you could tell if you could get those charts like that, like he was showing us on the videos. They're on his videos on the classes.
Okay.
Thank you. Yeah, thank you for that. Did that make a little bit more sense?
Yes, it's just, I don't know what throws me off so much about each type of them, that whenever I get to the test, I like,
Many words.
I don't know, I'm like right now, like for example, I just because, so like I know it's limited pay, but like adjustable life, I'm over here thinking, okay, because I'm not typically seeing it in my notes. I think that's why too. Like I'm like, oh well, it's not saying that it's not in the book. I'm just saying like usually, I don't know if that makes sense. Like I guess I don't, like for example, they threw modified on the exam one time. I was like, I didn't study modified.
Yeah,
Because
modified's a goofy one.
yeah, so when they threw modified, I'm like, what's modified? And then
Yeah.
adjustable life insurance, which I know I need to know all of them, but the main ones that they throw at me were like whole life, term life. It was like I never got modified. So that's why I'm like, I guess being thrown off with the types. Like that's one of my weakest points out of all of my chart.
Yeah. No, I hear you. I mean, let's talk about it. So you know straight life, you know limited whole life, okay? What's modified? Modified's a goofy one. I can give you guys the numbers and let's see if anyone can get it from there. You pay something either higher or lower for the first 5 years, and then the 6th year you pay what?
It goes leveled. I think it jumps up once in the beginning and then it stays leveled.
Yeah.
And then it stays leveled. But see, then I get confused with graded, because graded keeps going up and then goes leveled.
You got it. Yeah, you got it. So let's see. I have examples on here and maybe that'll help a little
And
bit.
you guys can pitch in, because like this is what throws me completely off when it comes to this kind of term. Maybe I'm overthinking it. Maybe it's a lot more common sense. Maybe so.
So graded, you're going to start out low and then increase, just like you said. So here's the example. Jennifer purchased a life insurance policy with a graded premium option. For the first 5 years, she pays a lower premium starting at $50 a month, which then increases annually to $80 by the end of the year, by the end of 5 years. Okay. After the introductory period, her premium jumps to $150 per month and remains fixed at that amount for the rest of the policy duration. Okay, so why would someone do graded? Let's say I'm in college. Okay, I'm a freshman in college and I want to get a policy. I can't pay $150 a month, but I can do $50 a month. Okay, for the first 5 years, I'm going to pay $50. Okay, at the end, not for the first 5 years. For the first premium, I'm going to pay $50. And then it's going to gradually increase to $80 by the end of 5 years. Okay. At 5 years, after the introductory period, it's going to jump to $150 and then it's going to stay level there. Okay. So the biggest thing for graded is just remember it goes up, 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 up. Okay. And then it stays level. Let me pull up the definition for modified and then, oh man. Okay, so modified, again, you're starting lower, okay, for an introductory period, typically lasting 3 to 5 years, and then after that, the premium's going to increase, okay? So, Emily purchases a life insurance policy with a modified premium option. For the first 3 years, she pays a reduced premium of $6 per month. It's not increasing during those 3 years. It's staying the same. And then after that period, her premium increases to $150 per month. Okay, so graded is it's getting bigger, bigger, bigger gradually over time. Modified is it's staying small for the first couple of years and then it's jumping up. Does that make sense?
Right. It makes sense. It's just so hard for me to like.
Seeing them. Does anyone have a good memory tactic to use for that? Let's see.
Mm,
I'm about to chat GPT it real quick.
I was about to do the same thing. I was like, let's ask ChatGPT, modified. First, okay.
Okay, so modified, it starts low at first, then it does a big jump later, and then it stays fixed. So it's low, big jump, stays level. Graded increases gradually over and then locks in. So graded is constantly increasing. Modified, it just jumps up once, like one and done.
Yeah, it didn't give a good memory tactic for mine either. I think you just have to
Sorry.
maybe your grades can change all the time. They can always go up, 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 up.
being graded.
Grades go up, 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 up. Modified is it's gonna stay low.
I got you. I'm writing it down.
Yeah, grades go up, 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 up. Maybe this is bad. Maybe it is bad, but you know, I had dyslexic. Look, clearly, you guys know I have dyslexia, right? So I took my test in a modified testing center. Okay. I always stayed low. I always had a time and a half. Always, always, always. Okay. Graded grades go up, 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 up. Okay. My modified testing time, it always stayed the same. And then it went up. I don't know if that makes sense for you guys. Maybe that'll help. Maybe it won't.
Right. And then whenever they say straight life, they mean ordinary, correct? Always. When they say straight life, that means ordinary.
Mm-hmm.
Yeah.
Okay. Okay. And then adjustable.
Adjustable life insurance. What's adjustable? I don't know if we've talked about adjustable.
It's the premiums.
Good.
So you only adjust the premiums. That's the only thing you can adjust is the premium.
It's mostly going to be talking about premium. That's the thing. You have to know what specific things you're going to talk about. So like universal, it's going to be talking about adjustable premiums and adjustable death benefit. Okay. Variable, it's going to be talking about adjustable, or where to invest your money, right? Adjustable life, you're mainly going to hear premiums. Let me pull up the example for that one because we haven't seen that one.
So adjustable life isn't considered universal life? It's not like the same thing?
Adjustable life and universal. My thing's not going right. Oh my gosh. Sorry. Okay. No. Sorry.
And the reason why I'm asking all these questions are so people that haven't took it, they're gonna throw you like types of policies that you didn't even really were studying hardcore on, so you don't fully remember. That's why I guess that's why I'm having such a hard time, because when they throw like limited pay, not that I don't know what it is, it's just I never really focused on specifically that type of insurance.
Okay, I want to share this screen with you guys because I actually made a slide for this. Let's see, it's slide 235. And we'll talk about it. Here we go. Perfect. Share here. Okay. Can you guys see this?
Yeah.
Yeah. Okay. So adjustable versus universal. Okay. So universal, when we're talking about flexibility, it has very, very high flexibility. Okay. The investment risk is with the policyholder. It's interest sensitive. Again, very high flexibility with premiums. And then the changes in the death benefit are allowed. Okay. For adjustable life, it's going to be a little bit less flexible. Okay. The investment risk is with the insurance company. So you're not really going to hear a lot about, in the question, it's not really going to talk a lot about the investment side of things. Okay. The cash value is fixed growth. They won't really talk about that. Premium, you're going to have some flexibility, and then death benefit is allowed. The changes are allowed. But again, when they're talking about adjustable life versus universal life, universal, they're going to say adjustable premiums and adjustable death benefit. For adjustable life, they'll talk about mostly premiums. Okay. Yes, the death benefit is adjustable, but you won't hear that as much in the question. So again, this test is a lot about knowing how they want you to answer the question and what they're asking for when they're saying certain things. Does that make sense? We can even go through here and we can look at this really quick. So flexible premium options. That's what you're going to hear. For a policy owner seeking flexibility in payment amounts and schedules, along with the ability to adjust the death benefit according to evolving life needs. An adjustable life insurance policy would be ideal. Okay. So they usually do not include dividends. We don't really need it. Let's look at the example. Come on, example. Or don't. That's fine too. There we go. Emma, who is self-employed and experiences fluctuating income, chooses an adjustable life policy to accommodate her varying financial situation. Initially, she opts for lower premiums to match her current budget. As her business grows and her income increases, Emma plans to raise her premium and adjust the death benefit to align with her expanding financial goals and family needs. Okay, so you're probably thinking about something that we just talked about, right? A lot of these terms will overlap, but again, when we're talking about this test in particular, you guys need to know what specific terms they're asking for when they're asking things in a certain way. So again, I'm going to reinforce this idea that half of this is understanding the material, the other half understanding how to take the test and how to answer those questions. Okay. So let's go back to here. Are we feeling good, bad, okay with this?
Good.
I
Good.
feel good. It's helping me.
Good. Okay. So all of the following are characteristics of whole life insurance except
The coverage expires at a specific time.
how do we feel?
Yep.
Yep.
Yeah.
Any questions? So when it's saying whole life, it's talking about ordinary whole life, right? Or straight whole life. Cool. A type of life insurance policy that provides coverage for two people, but pays out the death benefit only after both insured individuals have passed away. Ooh.
B.
Survivorship.
Okay. I was like, are you good? Okay, good. How do we feel about this?
Good.
Good. What is
Good.
joint life? What would it say if it wanted joint life?
That means the survivor would get the benefit.
Right. So it pays after the first one dies.
Yeah.
Okay. Survivorship pays after both pass away, which is weird, right? So I feel like survivorship, but whatever. I'm not gonna confuse you guys with my own brain. Okay. So how do we feel? Good? That was question 25. Okay. So I say we take a 10-minute break. We come back. We do Prometric life. 25 from those, and then we see how we feel. Good?
Sounds good. Thank you.
Of course. See you guys in 10 minutes.
Okay.
Bye.
Did I lose audio? Are you guys still here?
We're taking a 10-minute break.
Oh,
Yeah, no
yeah,
worries.
my whatever just kind of
Oh,
went
geez.
out for. Yeah, I don't know what happened there for a minute. My connection dropped or was getting ready to drop, and I didn't realize
Oh,
what
no.
happened. So
Okay, yeah. So we just finished up the 25 questions from PSI. We're going to take a 10-minute break and then be back and do 25 questions from Prometric.
all right, sounds good. Thank you.
Of course. See you soon. Okay, we're back on. We got a few more hours, guys. We got this. Not even. 4:30, 5:30, 2 more hours. Not too bad. All right, so let's go ahead, go into the Prometric questions. And go from there. Let's see. Share this screen. Cool. Do you guys see my screen?
Yes.
Yay. Okay, cool.
Yep.
Yay. Okay, so oh wait, we just did these. Hold on. Silly me. Let's see. Prometric. Okay. Which of the following best describes the primary function? It's good. I think my sugar crash is starting now. Which of the following, let me make sure everyone's in here before I start. Okay, I think everyone can speak. Okay, cool. So, which of the following best describes the primary function of life insurance?
B.
B. Provide a safety net for beneficiaries in the event of the insured's death. How do we feel? Good? Cool. What is the primary difference between stock and mutual insurance companies?
C.
C. How do we feel?
Yeah.
Good? There, maybe, hey, maybe the long answer, maybe that is the way to go. I don't know.
I just know because I got it wrong like 5 times.
Fair. All right, so should we go over that or we feel good? I did already skip it. I don't know if I can go back to it.
No, I'm good.
We're good. Yeah, we talked a lot about the stock versus mutual today, but I do not mind going over it again if we need to. No worries. Okay, what is the main advantage of risk pooling in life insurance? Ooh. What do we feel? What are we thinking?
I'm gonna say B.
B.
Okay, good.
A.
How do we feel?
Good.
Good. So we talked a little bit about risk management, right? Risk pooling was one of them. Okay. So an advantage of risk pooling, it allows the insurers to distribute the financial impact of claims among a large number of policyholders. We bring a bunch of people together and some of them will have to pay claims for, some of them we won't. Okay. Good here? The process by which a stock insurance company transitions into a mutual insurance company.
Mutualization.
Mutualization. What do we think? Look, look at that. Wait,
It's not the long answer.
not the long one. I was about to say, I was like, look at that long answer. That's not right. That's just restating the question. Let me I take a picture of it. Let me send that to him so we can fix that. Okay, mutualization. What do we think? Cool. I'm cool with it. Are you
Hey, I
guys
proved it wrong. I'm just kidding.
right? I know. Yeah, it's wrong. You're like, I don't know. Fire me. Fire me on this point. Okay. Okay, here we go. Ready? Next one. A type of insurance provider where policyholders collectively insure each other's risks. They insure each
Reciprocal.
other. Reciprocal.
Yeah, reciprocal, that's how you say it.
How do we feel?
Yep.
Good. They're insuring each other. We are reciprocating the insurance. I insure you, you insure me. Cool. Good. A company-owned insurance provider established to cover the risks of its parent company. Keyword, parent company. What are we thinking?
Captive?
Yeah.
Captive, right? Think Walmart. We gave that. I don't know if Walmart actually does that, by the way. That was just an example. Okay. Captive insurer, how do we feel? Good? John owns a small business and is looking for life insurance that will allow him to provide financial security for his family and business partners. He also wants a policy that builds cash value over time. Which type of insurance is best suited for John?
Whole life?
Whole life? How do we feel about this?
Yes.
Good. Process of elimination here, right? So I was like, let me just double check. But yeah, process of elimination here. Okay. So term life, it's only for a small period of time. It doesn't really say that he wants that. It's also saying cash value, right? Cash value is very, it's very much not a thing in term life insurance. Okay. So now we're thinking whole accidental death and group. He's not really saying anything about dying. He's not, I mean, accidental death, it'll be very apparent that you should choose accidental death because they'll say something about dying accidentally. Group life insurance, he's not really talking about a group. So process of elimination, we got down to whole life insurance. Good here?
Yes.
Cool. Lisa recently inherited a large sum of money and wants to invest it in a policy that guarantees her a steady income for life. Which type of insurance product would best suit her needs?
Annuity?
An annuity. Okay, why? Because it says steady income for life, right? If it's
Yep.
asking for a steady income, we're talking, Biggie, come here. Biggie. We're talking about life insurance. I don't know what he's doing. He's like,
So
lick-
I have a question. So when, so there was one about like assets, like basically, if I'm gonna just make a fake question because I don't remember how it was worded. Stephen and his family have assets, and if they pass, where were their, like basically what will cover their assets? I'm not sure if anyone else has seen that type of question or have taken the test, but it talks about assets, or excuse me, not assets, estate.
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 Okay.
So I don't know if we could cover that, maybe not in this one, but or whenever. I do want to go over these, like how estates work, because there was like a ton of questions on my state exam that I was like, I don't understand this.
Yeah. So, I know what you're talking about. It talked about like estate planning. Was that, what did you do? Remember that word, estate?
Yes.
Okay, cool. Yeah, so it'll talk about that when it's trying to compare life insurance to annuities. It'll talk about estate planning, because annuities provide an income stream, right? But they can also, and I remember this key, I know exactly what question you're talking about. I'm trying to remember. It used a keyword about,
If I'm not mistaken, the question I think is something along the lines where which one would provide the estate to be paid off or be able to save the estate, and I think it was annuity.
Yeah. It was something along the line of like of that, of like estate planning or like paying out. I remember I wish I remembered it. But so when you're talking about an annuity, you're talking about income for life, okay? When you're talking about life insurance, you have a benefit, right? You have a single It doesn't have to be single, people, you have your payout options that you can choose, but you're pretty much getting paid, okay? Or your beneficiary is getting paid, whereas an annuity is more so you're getting paid, okay? So estate planning, what's happening in the future, where things are going, I think they usually pair that with annuity. I could be wrong. Hopefully the question comes up and then we can talk about it. Oh, let's see, we got a chat. Oh, a Q&A. Oh, wait, okay.
Yeah, because I was really like on the exam, it had a bunch about estate planning. For if anyone that's from North Carolina, that's how it was for me on the second test, was a lot about estate planning. And I want full transparency, I didn't even go over that. I was like, I think it's gonna sound something, the things that I was quote prioritizing were literally the wrong things that were on the like totally opposite of what I should have been prioritizing. If that makes sense. But I didn't do, what section is that in our modules? Do you know by any chance on the right off top of your head?
I do not. I know I saw it. Oh gosh. No, I do not know. I don't know at the top of my head, but I can tell you. Okay, hold on. Let me stop my screen share. Oh God, I just did Command F and there's 67 of them. That's good. So straight life, I think it's, sorry. Oh no, it's everywhere. No, I don't know. I'm sorry. I don't know.
No, you're fine. Now going through these questions is reminding me a lot of like what I'm supposed to go like remember, because when I'm on the exam, because I tend to be like, okay, when I leave here, I'm gonna go and review over this, over that. But definitely a safe. I'll do research on it. No worries. I just maybe a question will come up on that.
Yeah, hopefully a question comes up and then we can talk about it. My mic is just gonna on the host and I'm not able to talk. I see your message, and I don't know. I don't think it's on my end because it says you're. Let me do that, and then let me try to. Sorry, we have. Okay, let me leave. Okay. No, it's okay. No worries at all. Okay. I don't know if you guys can see these chats that we're having. Can you guys see these chats up on the screen? Okay. Well, either way. Oh, wait. Remove pin. Okay. Sorry, y'all. Okay, cool. Yeah, hopefully something comes up about it. I know exactly what question you're talking about, and I wish I remembered it. And I remember thinking the same thing. I was like, this is kind of weird. This is a weird way to put it. Gosh, hopefully it comes up. We'll see. We'll see what we can do. Okay. Let's go on to the next one. Michael is a 35-year-old professional who wants to purchase a policy that will provide the maximum death benefit at the lowest cost for the next 20 years. Which of the following policies would be the best option for him?
20-year term.
How do we feel? Good?
Yes. When they put a number like that, like a 20-year term, they do that on the exam too. That's
Yeah.
still the same thing as term, right?
What is it?
Same thing as term, right? Like
It's the same.
if they could put 10-year term, they could put 15-year term. It still means like the same thing.
It's the same thing as term. Yeah,
Okay.
there's nothing more specific or less specific. Yeah. Okay, let me. She came back in. Uh-oh. She left. Okay. Yeah, she's just being they're just being more or less specific. Okay, on to the next one. Good here. All the following are characteristics of a fraternal benefit society except
Operates on a non-profit basis.
Ooh, are we sure?
C,
Um,
C.
the,
Okay, we're saying C. Good. So, fraternal benefit societies, they're nonprofit. Nonprofit, they usually come together because they are, a certain ethnicity, religion, things like that. And then they provide benefits, insurance benefits to their members. So the only thing that it's not is it's not owned by its shareholders.
Yeah, brain fart.
It's okay. No worries at all. No worries at all. The following are all considered elements of an insurable risk except
C.
B,
C, as in cat.
C. Okay, so we're in between B and C. Need a tiebreaker.
D.
D. Uh-oh. Now we really need a tiebreaker. We got B, C, and D. Someone's right. I mean, unless it's A. So all of the following are considered elements of an insurable risk. They're all insurable, except.
Shareable.
So the risk must be measurable. The loss must be accidental. Is that an element of insurable risk? The risk must guarantee a financial gain for the insured. The loss
I would say
No.
C.
C.
predictable. C.
Yes, financial loss.
Okay, so I heard a lot of C, so I'm gonna go C. Yay. Okay, so you guys caught it there. Yeah, financial, what was that?
Loss.
Loss, right. The risk must guarantee a financial loss for the insured. An element of insurable risk, okay? The risk must be measurable. It must be accidental, right? It can't be on purpose. There are riders for there's are like the suicide prevention thing that it talks about how you won't have you won't receive the benefits if it's due to suicide within the first 2 years. And then the loss must be predictable. So the only thing that it's not, actually, I'm kind of unsure about the loss must be predictable. That's an interesting one. Let me ask about that one because that's weird. But it's for sure definitely not a financial gain. It has to, the risk must guarantee a financial loss. But I'm gonna ask about this one.
Well, I think certain loss can be predictable, not all. I think maybe it's a general, like, for example, people can get sick. That's predictable. Like, you can be prone to getting sick, like, period, and sick and dying, so to speak.
Yeah.
I think that's how it's meaning it. Like, can it be predictable? What else? Someone accidentally dies in a car accident. That's predictable as well. Like, certain, I guess it depends on the policy, so to speak.
That makes sense to me. Let's look it up. Let's see. Um, uh, see what it has to say. Insurance predictability of a risk means the insurers can use historical data, statistical models, and actuarial analysis to estimate the likelihood of potential severity of losses associated with that risk. So I guess that makes sense. Risk must be predictable. Insurable risk should be predictable based on historical data, statistical models, or actuarial analysis. So if you get in a car, you could get in an accident and you could pass away from it. The light is my desk over because it's bright. Yeah. Okay, cool. How do we feel about this? We learned together today. Good? Cool. All of the following are methods insurance companies use to reduce adverse selection, except what is adverse selection? Or wait, answer the question first and then we'll talk about it.
C.
C? How do we feel? Good? Bad? I'm gonna say yes to this one. Okay, so let's talk about adverse selection. What's adverse selection? We talked about it earlier.
It's the individuals with a higher risk profile.
Yeah. Yeah. Adverse selection is just talking about not that they're not allowing, but more people with higher risks are going to apply for insurance versus people who have lower risk. Okay. So adverse selection is trying not to have so many people with such high risk, but to kind of have a little bit of everything. Right. So all the following are methods to reduce that. So to reduce the influx of just a bunch of high risk individuals, except for, so underwriting. So we know their medical history, we know what they do, things like that. That can reduce adverse selection. Medical exams, okay, know their medical history can reduce adverse selection, and policy exclusions can also reduce adverse selection. What's in a policy exclusion?
It covers everything except whatever the exclusion is.
Good. Yeah. It's like, hey, we'll cover you except if this happens. So a good example is the aviation rider or the aviation exclusion. So what happens is they will cover a pilot, and they'll say, we can give you life insurance, but there's an aviation exclusion on this, meaning that if you are operating a plane, when you die, we will not pay the death benefit. If you die any other way, we'll pay the death benefit. Not any other way. I mean, obviously we know there's things against suicide and certain, things like that. But for the most part, any other way will cover it. For the aviation, if you die when you're flying a plane, and you're a pilot, we're not going to cover it.
So there was a question on the test that it was like, so there's a woman, she was a lieutenant, but she didn't die from war. She died because she got in a car accident. I don't know. I think she went on a skydiving thing, but she didn't die from war. Did she get the benefit? Did she not get the benefit? So can we go into like the war clause? Because I was reading the definition. It's basically saying you don't get paid out, period, is what I understood.
Yeah. So you're saying, say that again. You're saying she was in the
Yeah.
war?
So the question was like, Susie was a lieutenant and she has the war protection clause, or whatever, and she went skydiving. Is she going to be covered by the war clause, or is she going to get paid half the benefit? That's what it was kind of asking.
Yeah. So the war clause is talking about they're not going to pay if you die at war. He's eating a stick right now. You guys hear that? So if she died during skydiving and wasn't at work, she wasn't, she just did it for fun, then they should pay. But then that also, I mean, in real life, that would bring in a bunch of other things because, like, I'm sure, you know, I don't know where skydiving falls specifically, but the war exclusion would say, we'll cover you, but if you die at war, we're not gonna pay for that. Does that make sense?
So what if she didn't die at war? Let's say that
Then she get the benefit.
and she get the full benefit.
Yeah,
Okay. All right.
yeah. If she died at war, she would get no benefit. Good? Okay, so which of the following best describes the purpose of the principle of indemnity in life insurance?
B.
B? How do we feel?
Yeah.
Good?
Yes.
Right, so it's to return the insured to their original financial position without allowing financial gain. Okay, so we'll restore you to where you were, no more, no less. Good? Which of the following is a fundamental requirement for a life insurance contract to be legally enforceable?
B.
B, good, we know that one, right?
Mhm.
A contract in which only one party, the insurer, makes a legally enforceable promise. We've seen this like 8 times today.
Unilateral.
You're allowed.
Cool. Emma purchases a life insurance policy on her husband's life. Which of the following must be present at the time of the application for the contract to be valid?
Insurable interest.
Good, insurable interest. So this is an interesting thing to bring up. She takes out a life insurance policy on her husband, and at the time of the application, she has insurable interest because let's say he's the breadwinner, but let's say they get a divorce. Would the policy go away?
No.
No.
No, right? Because it's only necessary for the insurable interest to be present at the time of the application. If it goes away after that, doesn't matter. You can still have the policy. Good? Cool. The following are characteristics of a valued contract except.
D.
D. What are we feeling?
C.
C. Okay, a tiebreaker.
I don't even know what a value contract is.
Yeah, I think it's C too.
Yeah.
Okay, let's go C and then let's talk about it. Okay, so what is a valued contract? The definition is in there pretty much.
Financial situation at his time of the death. I mean,
So the question's asking except.
Yeah.
Okay, so first of all, what is a valued contract? Anyone know what a valued contract is?
Probably
No clue. No clue at all.
No clue?
The
Okay,
benefit is a predetermined amount.
policy probably pays out regardless of actual loss.
Life
good,
insurance is an example of a valued contract.
good. That's exactly what it is, okay? Life
One more
insurance,
time. One more time. I didn't hear it.
so it's, okay, we'll go through it. Ready?
It's A, B, and C all together,
So A, B, and D.
or A, B, and D.
Yeah. So a valued contract is a life insurance policy, okay? The policy, the main point of a valued contract is B, which the policy pays out regardless of the actual loss, okay? You could have lost $200,000, but if the policy says 500,000, they're going to pay you 5,000. That's a valued contract. The policy pays out regardless of the actual loss. Does that make sense?
Kind of.
Kind of. Okay, so I buy a valued contract for $100,000. Okay, and then something happens, something bad happens. Okay, and I'm gonna get the benefit of the valued contract. Whatever happened to me only cost me $30,000. It doesn't matter. They're still gonna pay me the $100,000 because the benefit is predetermined. Okay, and they're gonna pay me that $100,000. It doesn't matter if I lost 50,000 or 5,000 or 120,000. They're paying me 100,000. That's a valued contract. So life insurance policy, I die, let's say you take one out on me, okay? And I die, okay? Let's say you took out a $100,000 policy out on me. Okay, I die, you have to pay for funeral expenses, all of these things. Let's say you're out $50,000. They're gonna pay you $100,000. Okay, let's say you have a big party and a funeral for me, and you're out $150,000. Doesn't matter. They're still gonna pay you $100,000. A valued contract is they're gonna pay you that benefit amount, and it doesn't matter why or how the loss. Doesn't matter how much the actual loss was. Does that make sense?
Right. Okay. All right. Maybe another question will come up. I get it, but not like maybe I'm overthinking it again. Bless my heart.
Okay. Explain it to me.
So basically, like you said, a funeral, you decide to throw a big party and it costs 100,000 to bury you, right? And then because I don't know, because
So-
I did
Go ahead.
Because it costs, and let's say that they valued it at 90,000, then I just get 90,000 even though I'm $100,000 out.
Okay, yeah. So the event doesn't so okay, I think you're overthinking this. It's not like an event happens and then they pay you. It's
Okay.
not like it's not like an event happens and then they pay you that amount in the sense of like, oh, that happened. Okay, we're gonna pay you this amount. It's a predetermined contract. Okay, it's a life insurance contract. Okay, it's literally like life insurance is a valued contract because I'm a deal and I say if I die, you're gonna give my beneficiary $50,000. Okay. Why do you buy life insurance? Because you have insurable interest, right? I'm gonna buy a policy because if that person dies, I'm gonna have emotional or financial losses.
Correct.
So I buy a policy because I'm gonna have financial losses of $50,000 on my house. Okay, they die, and I get paid $50,000.
Correct.
That's a valued contract. It doesn't matter if we have a mortgage. It doesn't matter if there's a bunch more losses that weren't accounted for that I need to pay for. They're gonna pay me $50,000.
I got you. Okay.
So a life policy is a valued contract. It's like at the end of the day, they're gonna pay me the amount that we predetermined. It doesn't matter what more or less I lost.
Okay. I got you.
Cool. Everyone else on the same page?
Yes.
Sweet. Which of the following types of life insurance provides coverage? Which of the following types of life insurance provides coverage for a specific period and does not accumulate cash value?
Term.
Yeah, it's term.
Okay, we got terminal. I think I heard two terms. So it's for a specific period and does not accumulate cash value? Term, right? Term doesn't have cash value and it's only for a specific period. Whole will have cash value and it's your whole life. Good?
Good.
Sweet. Which life insurance policy allows policyholders to adjust their premiums, coverage amounts, and death benefits?
Universal.
Flexible.
Flexible.
Oh, universal.
Universal? Okay, good. I was like, hey, that's a choice. Okay, universal. Are we good with this one?
Yes.
Good. Okay. So they're not going to try to screw you over too much. Like they're not going to try to put this and, something super similar. Again, we talked about how things can stack. We talked about how some of these definitions are very similar and it's just talking about like specific scenarios. But just so you know, this is talking about premiums, death benefits, all of those things adjustable. You're going to go universal. Good? Cool. A life insurance policy that provides a level death benefit and level premiums for the insured's entire lifetime.
Whole.
Whole. How do we
Yeah.
feel? Good?
Good.
Good. Cool. That's an easy one. A type of life insurance where the policyholder's cash value is invested in separate accounts, similar to mutual funds. Think sub-accounts.
It's variable.
Variable. Yeah. Okay, so this is a good question because I put variable. I don't know what happened. We knew which one it was. Okay, so when we're talking about variable, remember I said sub-accounts, think variable, right? Whenever you see the definition, it'll say sub-accounts like mutual funds. Okay, so you see sub-accounts, you see similar to mutual funds, like mutual funds, that's all variable life insurance. Good?
Okay.
We put variable. I don't know what happened. Whatever. Okay. David wants to purchase a life insurance policy that allows him to start with a lower premium that increases over time before becoming level. Which policy best fits his needs?
Graded.
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 Someone tell me the difference between graded and modified.
Graded is it starts it gradually goes increases, excuse me, and modified it shoots up once and it stays leveled.
Good.
So yeah, okay.
Good. That's perfect. Graded, it goes up. Your grades go up, 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 up. Modified is I'm staying low. I shoot up once, I stay level. Good?
Good.
Cool. Maria recently purchased a convertible term life insurance policy. 5 years later, she decided to switch to permanent coverage. What is the primary advantage of the conversion feature?
A.
A. That was pretty solid. What do you guys feel? Good? Yeah, I'm going to take that as a yes. All of the following are advantages of whole life insurance except
D.
The longer one.
Yeah, D.
the longer one.
Yeah.
Okay, we feel good about this one?
Yes.
Okay, remember whole life insurance, your entire life. Premiums are level, they're fixed. Okay, and it accumulates cash value. Good here? Which of the following are characteristics of term life insurance? Nope. The following are characteristics of term life insurance except
B.
B.
Good. Ooh. Good. Okay. So term life insurance, it provides coverage for a set period of time. It's generally more affordable than whole life insurance, and it can be renewed or converted in some cases. What was the what was the rider that we can put on to do that? We just talked about it.
Renewable.
So yeah, renewable. What's the other one?
Is it guaranteed something, guaranteed insurance or guaranteed insurability?
So that can be added, that can add things on. Okay. So we can add like other things, but not so much as like if we're talking about the whole policy, that's more like convertible or renewable. But if you're talking about the guaranteed insurability, that's more so you can add on things to it. Are we good there?
Yeah.
Yeah. Okay, cool. So that was question 25. How do we feel?
This has been extremely helpful going through the questions and breaking them down for me.
Yes, yes, this is like so much more reassuring. Reassurance, reinsurance.
Yeah, I love it. I love it. Let's throw out those dad jokes in here. Why not? Okay, so let me put out a poll. I'm gonna ask 3 things now. Let's go back. Let's can I edit this one? Okay, I guess I just have to make a new poll. Okay, so I'm gonna write questions so we can continue doing questions. We can go to the PowerPoint, that's gonna be PPT, or we can do all the Kahoots and go through all the questions, chapter 1 through 10. So I'm going to, and if we do the Kahoots, we can either do them together or separate. So let me save as webinar poll, launch. Okay, so yeah, go ahead and answer what you guys want to do, and then we'll go from there. We have about an hour left.
Could we do half questions, half Kahoots?
Yeah, do you guys want, it seems like that's exactly, like it's literally 5 and 5. So would you guys want to do that? 5 or questions and Kahoots?
Sounds good.
Yeah, okay, cool.
Do you have so the same exact questions that are on Kahoot is what's on the test? Or are those kind of like more you made them?
The Kahoot questions I made. Yeah.
Okay.
So it's not exactly what's on the test, but it is talking about definitions. So let's do a Kahoot, and then we'll go do questions, and we'll do like 10 questions, and then we'll go do another Kahoot and then do another 10 questions. Are we good with this?
Yes, and
Yeah.
I think it will keep us more awake.
Good. Okay, cool. Other thing is that I can stop at 5 o'clock and do 30 minutes of just questions, whatever you want, or we can do this till the end. I can also wait to see how we feel at 5 o'clock and go from there.
Let's do that because I feel like I wouldn't ask a couple questions.
Okay, cool. Cool. All right, so let me go ahead and share. Oh, okay, so you guys have, can you guys still see the link that I sent in earlier for Kahoot?
No, I got kicked out.
Okay. Oh yeah, no, it'll be a different game pin, but like the Kahoot.it website. Do you guys still see that in the chat? I can put it in again. Oh, no, you're right. Once you get kicked out, I see what you're saying. Okay, I'm with you. Okay.
You can just go back and you can get
Sorry.
different.
It's been a long day. Okay. So everyone got that. I'm gonna give you the game pin. let's do back.
Get your glasses out so I can actually read this thing.
Okay. Host live. Start. It's giving me a game pin right now. Okay. The game pin is 551.
Gosh.
0935. 5510935. If you can't get in, feel free to just watch. We'll show the answers and questions and everything.
What was the number again?
5510935.
When I put that number in, it's not working.
You may have forgot a digit because that's why mine didn't work. Because I forgot the number 1 in there.
No, I've got 5510935.
It should work. You may have to go out of Cahoots and like go out and come back in.
Yeah, I tried that already.
Oh, shoot.
I'll just follow along. It's fine.
Huh. I'm sorry. Is it working for everyone else? Or
I'm in.
I'm
I'm
in.
in.
okay.
Try a different browser, maybe.
Yeah, maybe switch the browser. Sometimes it's weird. Oh wait, I'm not even sharing my screen. Let me do this.
Oh my God, it worked on Chrome. That's dumb.
There you go. There you go. Gotta pull this down. Okay. Is anyone else still trying to get in? No. All right, I'm gonna go ahead and start. Okay. Chapter 2. A contract of blank is created by one party and the applicant must take it or leave it. Did anyone see how many people were in here? 9, 7. Okay, cool. Contract of adhesion. Okay. If you see take it or leave it, think adhesion. It's the contract of adhesion. What is an aleatory?
Unequal exchange of money.
Good. Perfect. That's exactly right. Okay, so it's an unequal exchange. So when we're thinking aleatory, think of a lottery. Okay. When you're entering into a lottery, you're going to pay for a ticket and you may or you may not get that $1 million prize. Okay. Hopefully you do. If you do, you paid $5 for the ticket and you got $1 million. That's an unequal exchange. Cool. What is apparent authority?
It's assumed knowledge that from the insurance producer, out in the field.
Say that again.
when you're out in the field, the insurance, it's apparent authority it's a given that you know that you get that authority, you have that authority, I guess is what I'm trying to say.
Yeah, exactly. It's the authority that you would assume you would have, right? Your apparent authority.
Yeah.
Okay. Any questions here? Are we good?
Yeah. What's the difference between that and implied?
Apparent and implied?
Yeah.
Okay, so apparent authority, okay, so implied authority is like, I assume I'd be able to do this. Okay, like let's see, let's think of a good example. As a agent, I would be able to let's see, let's say I would be able to take someone's premium, okay, and give it directly to the insurance company. Okay, I have a implied fiduciary duty. Okay, it's implied that I'm able to do that. Okay, and I'm responsible. I have a responsible fiduciary duty to that person. Apparent authority is like, this is exactly what I'm supposed to be doing. Like apparent authority, it's what's written in the contract. This is what I'm doing. Good?
So it's like clear.
Very clear. Yeah.
Okay.
Clear versus assumed.
Okay.
That's a better way to put it. Okay, Daniel, heck yeah. Norm, Tyra, I love it. Sweet. An agent represents both themselves and the blank during the application process. Careful on this one.
I can't see the screen. I
Oh,
can only see a portion.
I clicked the wrong one.
oh. Can anyone see it?
I can.
You can?
Yes.
Okay. Okay, so who said they can't?
Me, I can only see like the top two, like the red and the blue, but I can't see the
bottom two?
Yeah.
Is anyone else having that issue? Sorry, I'm not the best technology person. Are you doing it on your phone?
I'm doing it. I'm on the computer and on my phone.
Okay. Is the where you're answering the questions?
On my phone.
On your phone?
There we go. I see it. That was weird.
Okay, it's back. Okay, good. I was like, if someone's texting in the chat, I don't know why, like cannot open it for some reason.
Because of you, Jules, I'm figuring the answer is dog.
Good. Wait, what was that?
So because of you, I'm going to assume the answer is dog. They're dogs.
Right. I know, right? I would too. I would too. I put it on there. I was like, well. Okay, yeah. So keep in mind for this, an agent represents themselves and the insurer. They don't represent the client. Okay. Cool. Are you good with that one? Norm. Okay. Heck yeah. Christina and Lola. I love it. All right. A type of contract in which only one party, the insurer, is obligated to fulfill a legally binding promise. I expect 100% on this question. We've seen it so many times today.
What's the choice for yellow and green? I got it. Never mind.
Yeah. Oh, are you
It
still
keeps going away.
Huh.
So,
Can you
the choices are on the computer, but I only have the colors on my phone.
That's all I have.
But every time the question comes up, then the two bottom ones disappear and I can't see it.
Is your phone horizontal or vertical?
I've tried both.
And you can't move it, like scroll it up and down? Huh. Weird.
I'm on my computer and all I see is the icons too. Just the colors, I mean.
Yeah. And then every time the question pops up, everything disappears. I can only see the top two.
So what I can do is I can read it out loud for you guys. Would that help? Or you can't even click them because they're below?
Well, I can click them on my phone, but I can't click it on the computer, which is weird.
You won't be able to click on the computer.
Yeah, no, it's only on your phone. The computer is because I'm screen sharing.
You're good. Just keep going. If I can get it to work, I'll work. If not, then at least I'll learn something.
Okay. Okay. I'll read all the answers too. So hopefully maybe that'll help. Okay. So, I'm so happy everyone got this right. I would be really upset. I'd be like, if you didn't learn anything today, it's unilateral. We've gone over it 18 times. Okay. Norm, good. Christina, Elena, I love it. Okay. Cool. An insurer's right to seek reimbursement from a third party responsible for causing loss.
I think this is wrong.
Oh,
Yeah.
Okay. So let's talk about it. The definition of subrogation is an insurer's right to seek reimbursement from a third party responsible for causing a loss. So a perfect example of that is a car accident. Okay. So I get in a car accident and the person behind me hits me. Okay. My insurance company is going to pay me, and then they're going to go after that guy's insurance to get that guy and his insurance to pay for the losses that they had to pay. Does that make sense?
yes.
Yeah.
Okay. Utmost good faith is that both sides are being honest, right? To the most that they can, the best that they can. They're being honest and faithful, and also doing what they say that they're doing and covering. Okay. Reasonable expectations. That's pretty self-explanatory in the sense of I should expect this. And it literally goes in to say how any person, any sound person, anything that they should expect, those are reasonable expectations. So I'm going to get dinner somewhere. I expect that someone's going to give me a plate to put my food on. That's a reasonable expectation, right? Because I'm not just going to eat off the table or the floor. Okay. Parole evidence rule. We haven't talked about this one. What do you guys think?
Never
So
even heard of.
that has something to do with the juveniles.
Yeah.
Man, if I had a question about it, I could tell you the answer, but I don't remember it off the top of my head. Something about the parent dying and the juvenile being able to take over the policy.
So that's parole. That's okay, a little bit different. That's parole. That's a parole rider or a payer rider. That's a payer rider. I was like, I'm saying this wrong, but that's a payer. Payor. That's a payer rider. So when we're talking about a juvenile life insurance policy, that's saying if the person, usually their parent who's paying the policy, dies, then they can have a payer rider that pretty much waives the premium costs. So they can continue having the benefit of the insurance policy, but not have to pay premium costs. So that's a payor, Payor. What do you guys think about parole evidence rule? So I'll give you guys a hint. This is ooh, how can I give a hint without saying it? It's something to do with whatever's written on the contract goes. Pretty much just told you guys. Anyone, is it ringing a bell for anyone?
Oh,
Go ahead.
it's the no outside statements made
There it
before
is.
at the time of signing can be used to contradict, modify, or add. So yeah.
There it is. There it is. Okay. So if I say, oh, well, they told me this, or oh, but they said this before or after the contract, it doesn't matter.
Yeah, so
Whatever
once it's written down, that's it. It doesn't matter what anybody says.
you want it, you got to write it down. Okay. Doesn't matter what you say, what they say, doesn't matter. If it's written down, that's what's going to happen. If you said it, it's up in the air. It's not going to happen. Okay. Cool. All right. Let's see how we did on this one. Daniel. Okay. Daniel, Norm, Christina. I love it. Cool. All right. True or false? Estoppel is a legal principle that prevents a party from going back on what has already been established. Is that true, blue, or false, red? Good. Good, good, good. Okay, an estoppel, it's a legal principle that prevents a party from going back on what has already been established. It's one of my favorite words. I really love that word. Okay, any questions here?
There's a term that basically an agent can basically has the right to stop, or it's a term of stopping an insurance, or like not stopping an insurance, basically like I don't condone like this type of insurance, so I'm not gonna sell it to you. It's conjunction, conversion. I totally forgot what it was called, but it was on the test. Basically, when an agent interferes with that. I don't know if anyone knows that. I had it on the test.
I'm trying to think. What was the definition again? When an
It-
agent hears?
When an agent when an agent basically says, I'm not going to sell this type of policy or interfere with this type of policy, it's something called conjunction. I don't know, something like that. It's not conversion. It has nothing to do with conversion. It's basically stopping the policy, almost. If you don't know, it's okay. It just made me think of that.
Let me look it up. I'm not sure, but let me see if I can find something. I'm not sure. Does anyone
I'm
have?
trying to find it too. I don't recognize that word though.
Yeah, I don't either.
Can you say the whole situation again? Like the
So
whole.
it's basically like an agent. Let me see. I think you know what? Hold on. It's basically an agent like stopping, like you're the agent, right? And they're like, oh, well, I don't want to say this type of policy because I don't think it's going to be the right policy for you. Like they're allowed to interfere with that. Like the term of the interference.
So like someone's trying to buy a policy, but the agent doesn't think that policy is right for them, so they don't sell it to them.
Correct.
Some ethical thing, wasn't it? Like an ethical thing.
Yeah, but at the end of the day, it's you can advise, but you can't tell them what they can and can't do.
Right. I'm trying to see.
You can advise them, hey, I don't think this is the best, but at the end of the day, they make the decision.
Was this the thing where, like, let's say the person already has the life insurance, but they come to you to buy more, and you have to make sure that the life insurance that they're buying is better than the policy that they already have? Is that what that is? I know there was something like that somewhere.
Yeah.
It begins with a C. I know I'm literally looking it up right now. Maybe I can find it. I'm so sorry.
No, it's okay. It's good.
Like I want to know now too, because I don't know what you're talking about.
Yeah, I'm wondering if it's conversion when you replace a existing policy with a new one, you have to like show them apples to apples.
Yeah.
No, it's not that. It's
Okay.
because I thought the same thing out because it was on there. And I knew it wasn't
What is this
conversion
stuff?
because conversion is you when you convert a policy. You know, you actually go with it. Conjunction. Conjunction is what it's called. I think. Conversion, no. No, it's no. I feel like I really remembered it one day and I was like, that's what it was. It was literally in the middle of a sushi date that I was on with my husband. I was like, that's what it was.
Let me.
Are you sure it didn't say like something, something, something in conjunction with something, something, something?
No, it was one of the it was one of the like answer choices like conversion, twisting, misrepresentation, and then it said conjunction or something like that.
Yeah, I don't know. That word isn't in my notes anywhere. And I have pretty good notes.
Mine either.
Pretty good notes.
I mean, in my opinion, they're pretty good. I don't know if they are or not.
I have a book of notes and I don't see it.
Well, maybe I'm the one that's tripping then. Because
No,
I
No,
like
I believe that you saw it. I just
we all take different notes and we all
Yeah.
see stuff and
like just because I don't know it doesn't mean it doesn't exist. I'll tell you
right.
that right now.
Oh, God.
and if all we needed was our notes, we wouldn't be on this class right now more than likely.
I know, I'm trying to find this. I haven't heard of, again, like you're saying, it kind of sounds like
I guess it's like so I guess the agent can advise like for example let's say hypothetically right you're at a client's house or whatever and they're like oh I can do that premium but you're like no I don't think you not that you can't but like it would put them in a bind and you know that it will and you know that it's just gonna put them in like a chokehold at a point but you kind of like I just don't want to sell you the policy. That's what the question gave me to understand.
I know what you're talking about. I'm looking at my notes, but I think I know what you're talking about. Let me see if I can find it.
Because I mean, at the end of the day, I think you should like, for example, if somebody wants me to sell them a policy and I know that policy, they're gonna literally call me back and they're like, "Oh, I can't afford it," then what do I do? You know?
I feel like it goes along with like utmost good faith. You're not just selling.
Yes, it has something to do with that. It was definitely one of the state things. Definitely.
Yeah, if it's state specific, I won't have it on here.
Amy, what are you chewing on? No, ma'am.
Yeah,
well, if they financially can't afford it, then we can't give it to them, correctly? Right?
Yeah, but you can't like, let's say someone wants to pay like, they want a policy and they have to pay like $500 a month. Oh, is it twisting? No, it's not twisting.
500 a
No,
month. That's
no. It's not twisting. It was something that I was like, wait, what? Like I didn't know we like almost like I was like I didn't know we were able to do something like that type thing.
You're right. So okay, so let's say someone wants to pay like $500 a month for some policy. Okay. And you know that they have kids at home and you know they could do that, but if anything were to happen, that would put like the whole family financially at risk.
Correct.
So you can advise them to be like, hey, maybe do a policy that's $200 a month.
Was it maybe something like conscientious, something like conscious?
Yes.
Conscientious objection or something?
Yes, that's probably it. That was probably it.
That was a reach.
Yeah.
I just made that up.
Yes, I don't know about that. Yeah, I mean, I don't know. I don't know the exact term, but I feel like that goes along with like utmost good faith and kind of things pertaining to that. But if anyone finds it, hey, let us know. Let's all learn.
You imagine the ADP on that though, 500 a month.
I know. Don't think
I'm,
about
like, I'm an ethical person, but I
that. But yeah, there are, I mean, you know, you work with some of the high profile clients. Yeah, that can definitely be a thing. It doesn't come every day, but it can. It can. Okay. So, let's go to the next question for now. If anyone finds it, feel free to interject and you know, teach us. All right. The authority explicitly given to an agent by an insurer clearly outlined in the agent contract. I think I said this wrong earlier. Sorry, guys.
Yeah.
I said this wrong. Yeah, sorry. Express authority. Okay, so express authority is I take full responsibility for everyone that got that wrong. Full responsibility. But express authority is the one explicitly given, and it's clearly outlined. Let me go ahead and pull up apparent authority because I definitely got those confused. Let me see. So it refers to a situation where an insurance agent appears to have the authority to act on behalf of the insurer, even if they technically do not. And a reasonable person would be able to believe they do based on the insurer's behavior or representations. Okay, and then implied, the authority that is not explicitly stated in the agency contract, but is assumed to be necessary for the agent to perform their duties effectively. Okay. So apparent authority is what's assumed that the agent has from the insurer. The implied authority, I think, is more so talking about what the agent can do, like duties wise when they're working with a client.
Yes.
We good on that? I'm so sorry. I take full responsibility for everyone that got that wrong. I'm not perfect. I have my days as well, or my moments. Happens multiple times a day. Are we okay on this
We're
one?
good. This is one of those situations where you constantly are second guessing yourself and you know the right answer, but you choose the wrong one anyways.
If you have them all laid out like this, you can tell the difference. But when it's just like two of them, you're like, oh, I can't remember, right?
well, what gave it away for me at least was the clearly outlined in the contract part, because the express authority is clearly outlined.
Yeah.
But the other two were just, you know, can you or can't you? But the contract says you can or you can't do this.
Definitely. Good. Okay, cool. So we're good on this one? I'm going to assume that's a yes.
Mhm.
Daniel, Lola, Elena, Elena, sorry. Okay, cool. I love it. You guys are doing awesome. Okay, indemnity contracts aim to restore most of the financial losses. Careful with this one.
Oh,
Okay, why? Can someone
All,
You're
all.
to
Did we
restore
see
them
it?
to their original financial, where they were financially before the loss.
Right. Right. So it's not most, it's
all.
all. Yeah.
100% of it. Yeah. Yeah.
Yeah. Okay. We're good on this one?
Yeah.
Cool. Okay, Christina, I see you. Okay, cool. Once parties have put their agreements in writing, any previous verbal statements are not included in the document. This is what? Ooh, we talked about this one.
false. I don't know for sure.
Good. Parole evidence rule. That's exactly what we talked about, right? So anything that was previously stated or stated after verbally, it doesn't matter. If you want it, write it down. Good? All right. Lola, cool. Daniel's on the top. All right. Policy riders or endorsements modify original policy terms. True, blue, false, red. True. Good. Heck yeah. I'm glad we got that one. Yes, riders, they modify original policy terms. Can a rider add something or take something away? It's a question.
Yes.
That's something.
Yes, yes is the answer, right? It can do both. It can add something or take it away. Cool. I'm glad you guys caught on to that. Sweet. All right, sticking where we are. True or false? Aleatory contracts may have significant imbalance in paid premiums to what is paid out in an uncertain event. True or false? Aleatory, a lottery. Cool, we got that one. Okay, good. Yep, a lottery imbalance. All right, chapter 2 podium in third place, Christina. Nice. Nice, nice, nice. Second place, Lola. I love it. And in first place, I think I know who it is. Daniel. Woohoo! Yay. Okay, congratulations, guys. That is so awesome. Let's go back, do some more questions. Do you guys want to, I mean, we have 45 minutes left. Do you guys want like a 5-minute break to go to the bathroom and stuff?
Yes, please.
Okay, cool. Let's take, you guys want like 5 or 10 minutes?
5's good for me. I'm out.
Cool. Okay, we'll do 5 minutes and we'll be back at
Hey, so
55. What was that?
just this question has nothing to do with the course, so I just want to ask you a question. That
Yeah.
Cahoots thing, do you get
Yeah.
more points if you answer the question quicker?
Yes.
Okay. I was just wondering because this seemed like the points were different every time I clicked it.
Yeah. Yeah. It's different for how quickly compared to everyone. Okay, I'll see you guys at 55. Okay. Is everyone feeling good? Everyone back? Okay. I'm gonna take that as a yes.
No. No te van a ver.
Yep. Okay, cool. So what we can do from here, we have about 30 minutes left. If you're like, I'm done, I can't take it anymore, like I gotta go, feel free. I'm not gonna hold you guys hostage. Actually, before everyone goes, let me just make sure I have everyone.
Sí.
Let me make sure I have everyone's name down. We can continue and go back to questions until the end, or ew, there's a spider in my book. Oh, it's a big one. You guys, look. Can you guys see that? I don't know if you see that? Ew.
Bolt. ¿Dónde? En el warehouse.
Ew.
No, el bolt cuando caga, caga. Caga la madre.
Ew, squished in there.
He wants to learn insurance.
Oh, I'm so sorry. I thought I was muted. I'm so sorry. Yeah, okay, what did you say, Miss Jules? I apologize.
No, you're good. You're good. I'm just making sure I have everyone's name written down before anyone decides to leave or whatever they need to do.
I'm gonna
Well,
say,
Can I just ask one question about this?
Yeah.
Do you have to be in this course for a specific amount of time to be able to get the license? Like, is there a time amount on this, or is this just something that, like, that you guys are wanting us to do?
It's no, some places, some states require an online portion of this, but
Okay.
if you leave 30 minutes early, I'm not gonna penalize you for that. If
Okay.
you're like, I'm done, I just need to go, like, go ahead.
Well, I just don't know. Let me check.
Yeah, you're totally fine. Either way. Oh. I wrote here.
Like, what would this be called? Like an 8-hour is it a seminar?
Yeah, it's not. I have your name down. You're good. If you want to go, you can go. If you don't want to, you don't want to. But yeah, this is like an 8-hour webinar. Let's see. Catherine. Okay, yeah. Yeah, okay. So I have everyone's name. So like I said, if you are like, I'm done, we've done 7.5 hours, like I just gotta go, feel free. If you want to stay, we can do a few things. I can sit here for 30 minutes and you guys can ask me questions and we can, I can help you out with them. If I don't know them, we can learn them together. Or we can go through questions again. Or we can do another Kahoot.
so I have a question. Is it okay we go through, could we go through questions, but while asking questions?
Yeah.
Does that make sense? Can we do that? Is everybody okay with that? I don't want to just. Is everybody
Yeah,
okay
I
with
mean, I'm gonna stick around for the whole
Okay,
time.
bet.
Cool.
Yeah,
I'm
same.
good.
Any help is helpful.
Great. Okay, glad. I'm super happy you guys are finding this helpful. Okay, let me go ahead and share my screen and we'll get right back to questions. Do you guys have a preference of which ones we go through?
Taxes?
Taxes and types, the types.
Okay.
Also,
Go ahead.
I mean, I know somebody on here said that they thought that the test was going to be easier and it was a lot harder than it was. I
mean, that was me.
I mean, does it look like how it looks like that we went over? Because if so, it seems a little easy. Do they talk about writers, all the different types of writers during the test, or?
Yes, they do. It's going to be a little, you're going to feel that some questions are going to be very difficult, and you're going to feel some questions like we've had today are very straight up. It just depends what you get. There's a test bank of questions. You could get very lucky. You could get very unlucky. That's why it's just best to study everything and know as much as you can. So unfortunately, there's no like right or wrong answer. My best advice to you guys is go through the questions. Just questions, 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 questions. That is going to help you the most at this point in your studying. That's my advice to you. I personally gave up studying the book halfway through, and I just did questions. And
So I will say, so a lot of the questions are similar than what they're on the test.
Yeah.
When you're on the test, though, I took the test 6 times in total. It's a lot of what the practice questions are. Ms. Jules, I have a quick question. I know on the Pearson test, you know how you have 6 different types of tests? Is which one's focuses on the insurance types out of the 1 through 6 for the Pearson?
It doesn't. It's not like
I got you. I was just asking.
Yeah, no, you're good. It kind of just has a little bit of everything in every single one of them. So it's supposed to simulate the real exam. So it's gonna tell you a little bit of everything in all of them. Unfortunately, there's not specific ones unless you go to the actual, like you go to your modules and then go through like that specific area and then do the questions for that. But yeah. So saying that, I can't specifically pull out like questions about taxes or things like that. We can continue to just go through them and hope, say a little prayer that we can get some questions about taxes. Or
Let's do it.
Okay, is that what you guys want to do?
Yeah. Let's do it.
Can I tell you something that I've been doing that might help you?
Yeah.
I know I
Yes,
heard
please,
somebody
anything.
earlier. Well, I know I heard somebody earlier mention ChatGPT.
Mhm.
You can go there and you can act like it knows all about this stuff. That's what I've been using. And you can ask it to ask you questions. Like you can ask it to make multiple choice questions. And then you can ask it to wait for you to answer. And then after you answer, tell you why it's right or why it's wrong, and then tell you why the wrong answers are wrong and why the right answer is right. That's been really helpful for me.
Yes.
Like there's just so much that ChatGPT can do. Like you can ask it to compare and contrast this or that, or like you can ask it to do things that the tests, you know what I mean? You can just ask it to do all kinds of stuff. And I've like going through the retirement types, because that's where I'm at in the course right now. There's like 12 different retirement accounts. Man, that's that's rough. And I've been just going through it with ChatGPT and answering like 10 questions on each one over and over and over again. And eventually it drills it in, So maybe that'll help somebody. I don't know. It helped me. That's what I've been doing. And you create a searchable database of the stuff that you've learned. So you can go back and just type it in, and see what you were talking about. Yeah, that's what I've been doing. So maybe that can help somebody else.
You've been going where?
It's ChatGPT. It's chat.openai.com, I think is the URL. But for some of the more advanced things, you might have to pay a subscription fee for it. I pay the subscription fee. But yeah, it's I use it at work all the time. I use it a lot. I love AI. Like as long as you know what it is and what it's not, it's worth using it.
Yeah. I 100% agree with that. You can go in there, you can make it ask you questions. Yeah, it's awesome. It's really, really awesome. You can get a prescription. You don't have to. A prescription. What am I saying?
It might as well be.
I know, I'm like, give me a ChatGPT prescription, right? But yeah, that's great advice. Great advice. If you guys want some extra practice, go into there. If you've done all the questions from the actual question bank, go into there and do more. Yeah. Awesome. Should we get started?
Yes.
All right.
No sé, lo encontré, me gustó. Right?
Let's go through this. Okay, so What is the primary purpose of an insurance premium?
To serve a payment. C.
C. Are we agreeing with this one?
Yes.
Yeah.
Okay. So to serve as payment for the insurance coverage provided by the insurer. Are we all in agreement? I think this one's an easy one.
Yes.
Okay. Which of the following is the most significant factor in determining a life insurance premium? Ooh. Life insurance. What is life insurance all about?
Mortality risk.
Yep.
What? Oh yeah, hold on. I got
C.
C and I
D.
got
D.
okay. D.
C.
C. Okay, good. Yeah. Life insurance is all about if you're living or you're dying, right? So the most insignificant factor is,
Mortality rate.
are you gonna die? Yeah. When are you gonna die? How fast are you gonna die, right? What's your
Kill
risk?
us off.
Right. Right. Okay, we're good on this one?
Mhm.
Cool. Which life insurance premium payment mode would be best for a policyholder seeking the lowest overall cost? Ooh.
Annual.
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 Oh, you guys got this one. Good. Why?
Because they just pay one time, and when it's monthly, quarterly, and semi-annual, it might cost the insurance company, for like sending out statements or that kind of thing.
Yeah, definitely. Definitely. But yeah, I mean, at the basis of it, you're paying one time versus paying 12 times or 4 times or 2 times. Cool?
Yes.
All right. An individual wants to purchase life insurance with fixed premiums and guaranteed cash value accumulation. Which type of policy would be most appropriate?
Universal.
Universal? What do we feel?
Wait a minute, let me rethink that one.
Be whole.
Oh,
Whole? Did I hear whole?
I
Yes.
think it
Whole.
may be whole.
Yeah, I think whole.
Whole.
Yeah, whole.
Good. Okay, so we're saying fixed premiums, guaranteed cash value. Does
Yep.
Universal Life has fixed premiums?
no.
No.
It can change. Term, does it have a cash value?
No.
No.
Does variable have fixed premiums?
No.
No.
Good. So we got whole. Sweet. All right, is everyone okay with that one?
Mhm.
Yeah.
Lisa is concerned about her ability to continue paying her life insurance premiums. If she becomes disabled, which policy rider should she consider adding?
Premium rider waiver.
Premium waiver
Yeah.
of premium rider?
C.
Do we
Oh,
agree?
yeah.
Yeah,
Yeah.
I
Yeah.
agree. Heck yeah. Okay, that's the whole purpose of the waiver of premium rider. If you become disabled, you still want the policy, but you're not working. So you want to waive those premiums. Good?
Mhm.
Good.
John has a life insurance policy and wants to ensure that his minor children receive their inheritance under managed conditions rather than a lump sum. Which option should he consider?
Per capita
Getting a
distribution method.
B.
Yeah, B.
B.
B. Okay, I heard B and C. Which one are we thinking?
B.
B. Okay. I like this one. Cool. So, naming his estate as a beneficiary isn't gonna do anything for him in this situation. Not anything that he wants, okay? He wants to ensure that his minor children receive their inheritance under managed conditions rather than a lump sum. They're gonna waste it. Like, manage it, right?
Mhm.
Okay, so I'm just gonna assume that we can narrow it down to B and C. Is that correct? Because I don't think purchasing an annuity is what he wants because he literally said life insurance. So, okay, so we're down to B and C, setting up a trust as a beneficiary or using per capita distribution method. What is per capita? There's two of these. There's per capita and there's another one, per Does anyone know?
Or strike, I don't know, starts with an S.
Yeah, stirps, right?
Sturpies.
Per stirps, yeah, whatever, however you want to say it. What are those? What's per stirps and what is per capita?
The S one is where it gets passed down through the generations. So even if like the one beneficiary dies, the first, their child, then it goes down to their grandchildren and their
Okay.
child's children, whatever. And
Okay.
then, yeah.
Cool. What is per capita?
Does that just mean it follows the policy, like whoever is on the policy?
Yeah.
So let's see. So, distributing the benefits equally among all named living beneficiaries. Okay. So let's say I have 4 kids. I'm going to say my benefit is going per capita. Okay. Instead of having to name all 4 of those kids and go through that whole process, I'm just going to say per capita. Okay. Cool. All right. All of the following factors influence the cost of life insurance premiums except. This one's a tough one.
D.
Credit score.
Yeah,
Okay.
4. D.
Credit score.
Okay, so I heard credit score more often. I like that answer.
Mhm.
Occupation is going to influence cost of life insurance. Okay. Occupation, medical history, and age. Okay. So when we're thinking life insurance, and they're doing our underwriting for it. They're looking at how old we are. Okay. They're looking at our medical history. How soon are we, do we have any long-term things that are going to get us, long-term medical things that are going to get us? And then our occupation. Do we have a hazardous occupation? Credit score, yes, it can be taken into account, but it's not a main one.
Okay.
Good here?
Yep.
Real quick.
Yeah.
Yeah, I just had company come over, so I do have to go. You did mention that this was recorded. Where would it be posted?
Let me see. If you go,
Like what happened to the wire that was going this way?
if you go out, can you guys see my screen? Oh wait, I'm not gonna be able to show it to you guys because I'm on this. Okay, let me send you an email and get back to you on that.
Okay, sounds good.
Yeah. Okay.
You have it?
Have a multimeter? Yes. Okay.
Okay. I don't know if she's.
Oh no, I asked if you needed my email.
Okay, email. Okay, yeah. I was like, okay, good. Yeah, no, give me your. Let me have your email. I
Sure.
was talking to the people that came in. I was like, oh, wait, it's okay.
Okay, it's brandy.baez11@gmail.com. So BRANDEE.BAEZ11@gmail.com.
11@gmail.com. Okay, perfect. And it's BAEZ.
Yep.
Okay. Okay, perfect. Yeah, I'll send you an email. Anyone else that also wants that email, just put your email in the chat and I'll get it from there.
All right, thank you and good luck, everybody.
Sweet.
You too.
Bye. Thanks for spending the day with us.
The chat is disabled. How can you undisable it, please, my dear?
You have to go to the Q&A thing.
Oh, I do. I'm sorry.
Yeah, the Q&A button will put you there.
Okay. Yeah, so if you want it, go ahead and put your email in the chat and I'll tell you guys how to get there. Okay. Cool. Joyce. Okay. Sweet. All right.
I'm doing it. Trying the Trader Joe's viral lobster pasta. Start out by sauteing onion and garlic in the olive.
Oh,
Kicker. Kicker.
No.
Whoever's making lobster, I'm on my way.
I know, right? Yeah. Let us know.
the Trader Joe's style too.
All right. A life insurance policy provision that ensures the policy remains in force for a limited period after a missed premium payment.
Grace period.
Grace period. How do we feel about this?
Good.
Good. Perfect. Which of the following is the primary purpose of underwriting in life insurance?
B.
B.
Yeah, B.
Good. Feel good about this one?
Yeah.
What is the purpose of a field underwriter in a life insurance application process? Ooh, an underwriter versus a field underwriter.
To complete the application and collect the premium.
B.
Okay. Okay. So what is the difference between a field underwriter and an underwriter?
Field, one's in the field.
One's in the field. Yeah. Literally, one's in the field. One's working out. They're not working out. I mean, they could be, I don't know. But they're working outside with the applicants. Okay. The underwriter, not the field underwriter, but the underwriter is usually in an office and they usually do the deep dive. Okay. The field underwriter is just going to get like your name, your birthday, age, things like that. The underwriter is going to go way deeper than that. Good there?
Yes.
Cool. An insurance provider, an insurance producer is responsible for ensuring that an applicant fully understands their policy before the purchase. Which of the following actions best fulfills this responsibility?
A.
What do you guys think?
Yes.
Okay.
Good.
What is the difference between a policy summary and a buyer's guide?
Oh, yes.
Okay, so a policy summary is a summary of that specific policy. A buyer's guide is going to show you a bunch of different policies and say, hey, which one do you like the best? Here's all the information. Here's the summary of both of these. Which one do you like?
It's like a catalog.
It's like a catalog, right?
There you go.
Pick which one you want. A policy summary is a summary of one specific policy, usually the one that you got.
And that's what they usually give when you're getting Medicaid, right?
Medicaid, that's what they usually give when you're getting anything. They should always give you a policy summary.
Could you repeat that again? The difference, please?
So a policy summary, you're usually going to get after you purchase the policy. Okay. You could get it before, but it's usually something that you're going to take home with you so you understand what you have. Okay. A buyer's guide is something that you're usually going to get before you buy anything. And it's going to have a bunch of different policies on there. And you can choose which policy you like the best.
Yeah, normally you get the policy summary when they talk about getting the whole contract, you get it with it. It comes as part of the whole contract.
Yeah. Does that make a little bit more sense?
Yeah.
Yes.
Cool. All right.
I have a question.
Yeah.
Can you explain the difference between a binding receipt and a conditional receipt?
Yeah.
Yes.
Okay. All right. So a binding receipt is you sign this, I sign this, we're good. There's no other discussions. Like you're locked in, we're both locked in. A conditional receipt is we will continue this as long as you meet these conditions, as long as you get your medical exam. And then it'll go into a full, full service policy. So when you get a conditional receipt, you usually don't have full coverage. They'll give you coverage, but it's like a limited amount of coverage until you get your medical exam or pay, whatever you have to do. Okay. A binding receipt is you have full coverage and you're locked in. Does that make sense?
But
Yeah, that makes sense. Thank you.
but it means
This
that
is
the
the blind.
policy starts when you receive the binding receipt, or it does.
Say that again.
You have to pay the premium and have a binding receipt for the policy to start.
Yeah.
Is that
so,
correct?
Yeah. So like a binding receipt is you're locked in. Like, yeah, you've paid the premium, you've had your medical exam, everything's good to go. Like you're locked in, you're good.
But if you don't pay the premium, your policy hasn't started yet. Even though you have a binding receipt, right?
Right. But you wouldn't really be given a binding receipt until you pay the policy, until you.
Oh, okay. Yeah. Okay.
Binding receipt is it's like, I wouldn't give you a receipt before you bought the clothing item.
Mm-hmm.
Right? So it's like, you have to buy it and then I'll give you the receipt. And it's either a receipt that says, heck yeah, you bought it. Like, okay, listen to this. Ready? Things that are on sale, usually you buy them and you can't return them. Right? Right?
Yeah.
So things that are on sale, you buy them and you can't return them. That's a binding receipt. You got that no matter what. Like you can't return it. Okay. A conditional receipt is you can buy anything else that's not on sale and you can try it. If you don't like it, you can return it. Don't actually think about it like that. But in terms of what we're talking about, yeah. So binding receipt is like you're locked in. It was on sale. You got it. There's nothing else you can do. A conditional receipt is, you have to do this, that, and the other, and then you fully get the policy. Good.
Can an underwriting decision change the binding receipt though? Like, so you get the coverage immediately with the binding receipt.
Yes.
So obviously underwriting hasn't been done yet, but after the underwriting does get done, they can cancel it if they don't want to insure you, right?
With a binding receipt?
Yeah.
Binding receipt, so usually that is like you're locked in, like underwriting.
Well, I know, but I thought that binding though meant it started immediately.
Yes,
So you sign the policy, you pay the money, you get the policy. But if they take that to underwriting and underwriting says, I don't think so, do you still get to keep the coverage, or do they cancel you?
No, they don't cancel you.
So it's
Binding
just
you're locked in.
it bypasses underwriting altogether.
You're locked in. You still have underwriting. They still do underwriting. They still do underwriting, but it's not like it's not to the extent of like some of these policies. Like usually a binding receipt isn't going to be something like, okay, if you buy a $500,000 policy, the underwriting for that is going to be like very extensive. Okay, they're gonna talk to your family, your friends, and everything in between. Okay, if you buy a $5,000 life insurance policy, it's the underwriting is going to be there, but it's not going to be that crazy. Okay, so with a binding receipt, you're like locked in, like both parties are locked in. Let me double check and make sure that they can't cancel it, because I'm pretty sure once you get the binding receipt, it's like you're locked in, but let me just double check.
I think I understand what you're saying. So like with the binding receipt, it would just be like, it wouldn't be that big of a policy. Like they're just giving you the policy because it's got like a $5,000 face value. Who cares? You can have it. But if it's a big policy.
Yeah. I don't think they would give out a binding receipt in a big policy. Let me double check that just to make sure. But yes.
But here I look it up and it says that the cover is contingent upon specific terms and condition outlined in the receipt.
Yes. So yes, changes to the insurance policy are generally possible even after a binding receipt is issued, although the specific terms and conditions depend on the policy and insured. Okay, let's see. Okay, yeah, so it said that you can make changes to it or even cancel it before the final policy is issued. Okay. So my understanding of a binding receipt was that you're locked in, but this says that you can have changes,
Right.
or even cancel it.
Because
Because you're not
Because in-
insurable at the time of application.
Yeah, so you were right. You were right. I was wrong.
Don't
Good.
say that.
No, it's I'm learning too, you know, like I said, I'm not perfect. I don't know everything.
Alright.
I do not know everything, but yeah. Okay, good to know.
I was just asking a question. I didn't know either, to be honest. I never
Yeah,
thought about that till just now.
yeah. But then this, okay, so then this one says binding receipts provide immediate coverage from the date of the receipt, while conditional receipts provide coverage only if the insurer's underwriting requirements are met.
Correct.
Well, see, wasn't it one of them that that we don't really use anymore?
Yeah, it's binding. It doesn't really get used.
Yeah. Because of it all. And then the other is where, I mean, you collect the premium and they would prefer you to collect the premium right up front along with signatures, and you send it in to do the underwriting. And then the way it works is that it depends on if they have to do the medical report, then it'll start either or when the premium is collected or when the medical report comes back, one or the other, whichever one the date is first.
Right.
Yeah.
So I from my understanding, I know that you get you get limit when you have a conditional receipt, you still have limited coverage. Like you have a little bit of coverage, but it's not full coverage.
Yeah.
During that time. Whereas maybe binding, you have full coverage right off the bat.
Yeah, I think that's the difference.
Yeah.
So which is the receipt that you were asking, okay, when the policy is then, what day does it, so it's a binding
And
receipt?
if the insurer dies during this time of the binding receipt, the insurer pays the claim.
The binding receipt, yes. The
Yes.
conditional receipt, I don't think they have to.
I think
No.
it goes back to that insurability thing. So like if they were found to be insurable at the time of the application and they die while they have the binding receipt, then they pay the claim. But
Yeah.
if they were found to not be
Yes.
insurable, then they don't pay the claim.
Yeah.
Right.
Yeah. And then, Brittany, what was your question?
So then I totally forget, and please refresh my memory. So when the premium is paid, right? And then the application, and they're like, all right, we're good to go. And they're like, okay, bet so it's the binding receipt that basically they have to receive so their policy starts that day once they get the binding receipt.
Mm-hmm. So
Okay.
Because even with a conditional receipt, the policy will start. It'll start. It won't be full coverage, but it will start.
Okay.
Okay. So in that question where it asks like when does coverage start on when they get the receipt, when the applicant gets the receipt, that would be the answer.
Okay.
I had a lot of trouble with this too, because there's a differentiation somewhere that I still don't quite completely understand with the conditional receipts, where the coverage starts, but there's no coverage until they're found to be insurable. So if I've got a conditional receipt and something happens to me and the policy isn't in force until they prove I'm insurable, I mean, I still don't, I can answer the questions about it, but I still don't completely understand the concept.
Right.
Let me see.
You know what I mean? Because
and I think that in the test there's a question that is that if you have a conditional receipt and then underwriter approves you, but they don't deliver the policy or whatever, are you insured during that time or not?
I think
Between underwriter and you receiving the policy.
I think it just all hinges on whether you were found to be insurable at the time of the claim.
Exactly. That's what I'm saying.
It's confusing.
But at the time of the claim, yeah.
Yeah, sorry,
By the time
I
of the
gotta go,
application.
guys. Oh,
Time of the
I gotta.
application. I'm sorry.
Oh, you're good. I gotta go, guys. Everybody, good luck. I'll pray for you guys. I hope you
You
guys
too.
have a very good study session. My test is next Tuesday. Miss Jules, thank you so
Mine
much for
too.
your time. I appreciate everything you did for us today. You were a great teacher, and I appreciate everybody. You guys are very smart.
I don't know about that, but
Good luck.
You
Good
got
luck.
it.
Got it. Keep you guys in my prayers as well. That's so sweet. I love it. Okay, so it says coverage can be in effect when conditional receipt is issued, but it's temporary and subject to conditions. So if something happens when you have the receipt, and you don't have like the full policy, you can, like you're saying, I think it depends on if you were found insurable at the time of the claim.
that's that disconnect for me is still there. Like, what's the difference between
Yeah.
the policy starting and then the policy getting approved and having coverage? I mean, I can get the question right. I still don't have the concept down, I guess. I don't know.
Yeah, the in between. Yeah, I literally think that it's just you have coverage, it's limited coverage, and then it depends on if you were approved or not.
The question, what's the point in it being limited? Because if, if you're going to be covered at all, then, what are they going to cover? Because I don't add that part by saying limited, because I've read it where it said limited as well. It's not just what you're saying. I
Yeah.
don't get, why would they do just limited? Because if you're insurable or not, it's one way or the other. They're not just going to pay just partial if something happens to you.
Right.
Yeah,
I think
that's
what it means by limited is that it depends on if you're like, it's limited in the sense of you could get it or you couldn't get it. That's how I always took limited. Again, it's iffy. Here it says that coverage can be in effect, and I think that's the biggest thing.
it can be, but is it?
Can be. Yeah, it can be. Like if you were found completely good and you're good to go and you have coverage. My other question would be if they knew that you're filing a claim, this is outside of the test, but if they knew that you're filing a claim, could they just find a reason to deny you because they wouldn't want to pay for that because it's so early on?
Yeah.
I don't know.
Yeah, that's my disconnect too. Maybe after I do it, I'll understand it, but I still don't perfectly get it.
That is why I'm saying you guys, like when you get into the field, have a very good teacher, have a very good mentor, because a lot of the book stuff is very different in real life.
Right.
Yeah.
That's where my concern comes in because I've always been the type of person that I learn by doing things.
Yeah.
Not by taking tests or book. And so, with this being a brand new venture for me, it's kind of scary.
Yeah, no, it is. It is. And insurance is hard. There's a lot of insurance agents. But again, that's why it's super important to know who you're working with. Ask for recommendations from them. Talk to people that worked for them and have worked for them. Just to kind of know, learn their training process. Like how much training do they offer?
Yeah.
It's very, very important. Because like I said, I came into this from the medical field and I had 2 days of training. And then on the third day, they said, good luck. And I was like, good luck.
Excuse me?
I was like, dude, that can't be to me, right?
Yeah.
Yeah. So just be aware of that and just, know who you're signing with. That's what I have to say. But yeah. So it's 5:30 right now. I will stay for a little bit and answer any other questions that you guys have. Whether that's about, maybe I can stop the recording so I can.
Do you know?
Yeah.
Oh, sorry. Do you know real fast about the fingerprints? How far or what exactly they're looking for? When I looked it up for Oklahoma, that yes, we have to have a fingerprint, but I have to do it to get it started online to set the appointment up for it. And it's got different types of fingerprints. So I don't know exactly which one they're wanting for the licensing.
there's a specific code that you'll bring to the fingerprint place, and they'll ask you, they'll be like, what do you want this for? And like you'll have a specific code. Once you finish the course, you should get a text from like 734 maybe something like that. From Justin, that's gonna tell you your next steps. And it's gonna be state specific. So like how to get your fingerprinting, what to tell them, things like that.
Okay, I've already finished my course, and he had me start doing the license. Well, they told me to do that one thingy where you paid for the next steps. And then
Yeah.
I've done, yeah, and then I did the next step on the course thingy as well. Yeah, and I've technically already took my license. I did it once, and I go back again on Monday, but I didn't even, they never have said anything to me about the license.
It should have
And,
been when you
I
completed
mean,
the,
not the license, the fingerprints.
huh? Yeah.
So
So you
Uh,
had your license, but you never got fingerprinted?
I know I went and took my license. I mean,
Oh,
I
I
took it,
gotcha.
I did it at home online, but so I've done one license once and I didn't pass it. So I have to redo it again Monday. But I didn't think about getting my fingerprinted because they didn't say nothing. So I wasn't sure.
okay. So you might have, so look, go to your messages in your phone, and it should have come from a 754 number. It might have came in when you started with the course. 754 area code.
Yeah, I got a message from that 754, but I texted them a couple times and got no response.
I don't know if I don't think you can like text back to it. I think it just tells you what to do, like when to do it. So what was the text? What did it say in the text?
It just says, Virginia, you'll take your state exam, go for fingerprinting, apply for your license. You will go here to schedule your state exam. And then it says you're scheduling the Virginia Life and Annuity sponsors, Virginia Department of Insurance. Please let me know what day you schedule it for.
Yeah, that's what it
And
said
then
to me too. So
I had some issues getting it actually scheduled. And then I texted the number multiple times trying to get some assistance, but I got absolutely no response.
Okay, let me
But
ask.
then once I scheduled it, I got a text message from the hiring team that said that the pre-licensing exam or the exam has been scheduled. So they got it. They know I'm scheduled for it.
Okay, I just asked Justin to see if people can respond to the 754 number.
Now that I've gone through this though with the questions and we've gone through the questions and stuff, I'm actually scheduled on Tuesday, and I think I'm going to reschedule it for a little bit later, because now that I know how to break down the questions, I want to go back and break those questions back down again.
Okay.
And do those modules like we had talked about, because I think that's going to be a huge help. I know
Yeah.
if I go Tuesday, I think I know I'm going to fail it.
Yeah. Okay. Yeah, definitely go through the questions. But yeah. Okay. Keep me updated. I'm gonna email you guys. So if you guys have questions, feel free to email me back. I will respond. It is a two-way email. I'm not sure about the 754 number. But as for Christina, you were telling me that you had some issues with scheduling the fingerprinting?
Yes, ma'am.
Okay. Okay, so did you send me your email?
No, but I can real fast. Let's see. Maybe.
Let's see. Yeah, send it in the chat and I'll let you know what he says because he hasn't responded yet.
It says it's disabled. How do I
You got to click the Q&A button. There's a Q&A button down there near the raise hand button.
Yeah, I see it. Thank you.
Yeah, sure. Took me a minute too.
I was like, it is not letting me.
Hey, Jules, I think you need to do a webinar on the questions and answers.
Really? I know, I should. I'll ask him. I'll see if he can like, can you hire me more?
I'll be there.
Yeah, I'll ask him. I'll see if he wants to do that. Do you guys think that was like the most helpful part?
Yes.
It was because, me going in, like I said, I've fought with dyslexic almost my whole life. So all through high school, my teachers, if it was a time test, they would always have me just do the test. I always failed it. And then they would always bring me back in. And then I would redo the test without timing. But I actually had a teacher that kind of taught me how to do testing. And instead of reading like the whole sentence, I read the keywords. So with this, trying to read the keywords can really be deceiving because you're not reading all the words, so you're not getting everything. So it's almost like having to relearn it all over again. So just having that breakdown was super helpful.
Oh yeah. No, I hear you. I hear you. I went through the same thing. Listen, I fought with there. So you go to medical school, you take the MCAT, and the AAMC is the worst. Like they're the worst. I fought with them for so long for accommodations, and my friends with ADHD were getting accommodations. Nothing against people with ADHD, but they can take a pill for it. We're dyslexic either way. There's nothing we can do about it.
No, there is nothing we can do about it.
Nothing we can do about it. So I was getting super frustrated. So I hear you. It's annoying, but just so you know, you're just as smart and just as capable as everyone else. It takes you a little bit longer. It does not mean anything. It really doesn't. Doesn't matter. So don't lose hope. Don't lose hope in what you can do.
No, this is probably, I'm 50. This is my third career. And this has been the most challenging career, or the most challenging trying to get to. And then, like I said, with the dyslexia, it's like, oh my gosh, it's like right back in my face all over again, just like I was when I was a teenager.
Yeah, I hear you. I hear you.
One step at a time, though. You can do it. You'll get there.
Yeah, you will. And you can apply for accommodations for this test. I didn't because I was so over fighting for accommodations because I did that for a whole year for the MCAT. But you can. If you're having troubles with getting through it, definitely take advantage of it for sure. But yeah.
Well, I figured I'd at least take it like the first time and then see how I do and then what struggles I have. And then if I have to reschedule to take it again, at least that way I know what I'm up against and what I'll need, what kind of accommodations I would need.
Definitely.
The only thing that concerns me is I'm a diabetic, and so my blood sugar's monitored through my phone. And so I've been told that you're not even allowed to have your phone.
Yeah.
And so that concerns me a little bit. So I did request those accommodations to be able to keep my phone so I can continue to watch my sugars.
Yeah. No, that's good. It's scary, but you guys will get through it. There's so many people that did it before you that are way less capable than you are. I always think about that. I know that's terrible to think about, but you guys got it. I promise you'll be okay. Just put in the study effort.
Sorry. Did you get my email?
Yeah, I got your email. I'll get back to you, and then I'll get back to everyone else about where the recording is and how to get to it. And then yeah, I wish you guys the best of luck. I'm gonna keep you guys all in my prayers. You guys are gonna be great. Seriously, questions. I can't stress enough. Go through the questions.
All right.
Thank you, Joel, so much.
Yes, thank you very much.
And again, you guys will have my email. I don't know everything, but we can figure it out together. If you have any questions, feel free to reach out.
All right.
Awesome.
I appreciate
Thank you.
Thank you.
Have a
Good luck, everybody.
Have a good
Yeah.
evening.
Thank you.
Thank you so much.
Bye, guys. Of course.
Bye.
Did we get your email? Did you give it to us?
I'm gonna send you. Did you send me your email?
Yes, I did. Okay.
Yeah. So I'm gonna send you guys an email. So did I get your email? Oh wait, I wrote yours down, didn't I? I wrote yours down. Let me see. Wait, did you put it in the chat?
Yeah, I did.
Oh, okay, wait, I see it now. Yeah, 069@gmail.com.
Yes, that's it.
Okay. Yeah. I have yours. Yeah, so you guys will have mine. Feel free to reply or send me an email if you have any other questions.
Okay. Thank you. Have a nice evening. Thank you so much.
Bye.
Bye.
Everyone else okay?
Well, I have like just one extra question if you have like 2 more seconds.
Yeah.
This has nothing to do with the course or anything.
Yeah.
Just so as I understand this, insurance salesmen are 1099 employees, right?
So not all of them are, but a lot of them are.
Okay, so that's a good enough answer. So just
Yeah.
if you're working as a 1099 person, which I'm assuming that's what I'm going to be doing,
Yeah.
like what happens? So if is his name Adam Jr.?
Yeah.
So as I understand it, I would be working for his agency,
Okay.
right?
So
Is that correct?
So you can work for whatever agency you want. I don't know specifically who Adam is, or what his
Oh,
agency is. But if that's who you feel comfortable with, then sign with him. But definitely ask for recommendations. Talk to people who have worked with him before. You want someone that can train you. You want someone that's going to be hands-on, because if they just leave you, there's tens of thousands of agents all around the world that are trying to make it, right? And if you don't have the correct guidance, it's going to be really hard. It's going to
well,
be
just
really hard.
because the way that I understood it was I'd be under this dude's agency. So we'll just say it's anybody's agency.
Yeah.
So I'm in this person's agency, and then they give me leads or I pay for leads, and then I call the leads, and then I do the appointment, and then I sell or I don't sell, and then it's just a meat grinder, right?
Yeah. Just put it in the work. That's all it is putting
Okay.
in the work, knowing how to talk to people, and then, just being confident in what you say. Even if you're not 100% sure, tell them. I mean, transparency is always good, but, be confident and you should be fine. But again, be careful with who you sign with. Make sure you know them, you trust them. And there are agencies that offer a base pay. There
Mhm.
are, but you're
It's not going to
probably
be. It's not going to be what I'm making at my other job, though.
yeah, it's probably going to be like 50,000 base pay, and then it's going to be commission on top of that. But you're probably going to be in an office from 9 to 7 p.m. and working Monday through Saturday.
Yeah.
Okay.
Yeah.
So have it be, being a 1099 has its perks. It also has its downsides because you're going to be fully based on commission.
Well, and the way too that I was thinking is once you get that customer base, that you get that sweet commission rolling in all year, you don't
Yeah.
really have to do as much work, but I feel like I'd be doing more work because I don't want to say it's easy work, but after you've done something 1,000 times, I mean, how hard is it really to sit there and call 100 more people? You know what I mean? So
No, definitely. And it'll be tough. Like it definitely will be tough.